What's up, everybody? Good evening. Good evening. Welcome back to my channel. I'm streaming on both X and YouTube, but welcome back. I appreciate y'all joining. Today is May the 3rd, 2026. Sunday, May the 3rd. We are beginning in the markets. We are beginning the first week of the month. I believe we got about 4 weeks in May. Let's make the best of it, right? Let's make the best of it. How's everybody doing this evening? I appreciate y'all joining. Got a lot to get into with these markets, the debt, the world order agenda. We got some things to get into, right? And we're going to tie it all together with the markets. Let me get a quick roll call. Make sure y'all shout out where y'all from, city, state, region. Make sure y'all subscribe to me on X, subscribe to me on YouTube, right? If you haven't joined on X, my X account, y'all come over here on X, right? Let me come to my page. Y'all come over here on X and follow me on X, right? I'm starting to stream on X. So streaming live on both platforms right now, right? So y'all choose which one y'all do. Y'all choose the one that y'all prefer. What's up, AWB? What's up, Shep? What's up, It's an Illusion? What's up, Mark? What's up, Dorelli? Shout out to y'all, man. Appreciate y'all joining. Who else we got? What's up, Mudvayne? What's up, TZ? What's up, Night Owl? Appreciate y'all joining. If you're brand new, and I'm gonna go ahead and do this. Let's test it out, right? Let's go ahead and test it out. If you're brand new and y'all want to join the Discord, right? There's a link in the YouTube. There's a link in the YouTube chat, right? Y'all, if y'all want to join the Discord, it's open for now, right? I'm doing a little test, see how it goes, but it's currently open. So if y'all want to join the Discord, y'all come in. It's a great growing community. So I advise y'all to join. Let me go ahead and do this. I'm going to do this one time just to see. I'm going to post the Discord link in my chat on X. So let's see how that goes. I'm definitely going to be on the lookout for bots and spam. So y'all going to get up out of there if I drop this link. I'm not having it. So let me do this. And make sure y'all hit that like button on YouTube, subscribe. Appreciate the viewership. Appreciate the viewership. We're gonna get into the markets. We're gonna get into price action. It's a new week. Gonna get into it all. I wanna cover a lot of things dealing with this debt bubble as well. I wanna cover these things dealing with this debt bubble. If y'all over here on X, I got 10 people on X, 16 people on YouTube, right? X is boom, man. I think X got a lot of potential for live streaming. Don't sleep on it. I don't see too many people streaming on X, but I'm gonna post the Discord link in X if y'all want to join the Discord. Right? If y'all want to join the Discord. I'm doing this as a test run on X because I already know how it gets. Appreciate y'all joining, man. 14 people on X, 17 people on YouTube. We doing the thing, right? We doing the thing. So we're beginning the new week. I dropped the Discord link as well. I dropped the Discord link, but we're beginning a new week. First thing I like to do as a trader, right? As a trader, the first thing I like to do is I like to start my week off by looking at the economic calendar. We need to have a roadmap, right? Because as a trader, I can know when they're going to inject liquidity and volume in the markets, right? I can know. And also we're starting a new month. So normally every month I start a brand new analysis on the markets that I'm following. So y'all in the Discord, right? You need to refresh your charts, start over, top down analysis, have a clean chart going into May, right? And we're also in the second month of the second quarter, right? When the second quarter of 2026, we're currently in the second month. After May, we go into June. Once June is over, we cross over into the third month, which is the third quarter. Excuse me, not the third month, the third quarter of the year. So the year is flying by fast, right? The year is flying by fast. A lot going on so far in 2026. Let me read these comments right quick. What's up, Ed? Appreciate you joining. What's up, Ryan? Appreciate you joining. What's up, Shep? Yes, boss _trader, right? Yep, that's my original alias. That's my original alias. Yeah, y'all come over here. I'm gonna put it on the screen for y'all right quick. Let's put it on the screen so y'all can come over here, right? Boss Trader, right? That's my original, that's my original name when I popped out on the internet. But it's still my name. I'm going back to Boss Trader because that's my niche. That's my lane, trading. So I'm a boss at trading, right? So that's my thing. So y'all come over and follow me. I'm over here streaming live streaming right now. So y'all check me out. And then I also can come up, I'm over here posting as well. And then if you come over on X, make sure y'all repost it so it can click in the algorithm, tag the influencers as well so they can learn something. Tag the influencers so they can learn technical mastery and technical skill when it comes to these markets, because you already know these markets repeat over and over again, and we are predicting the markets and we are timing the markets, right? So that's what we're doing. So first thing I want to look at, I already look at the economic calendar. Well, let me come back. Look at the economic calendar. Where's my calendar at? Right here. So, okay, coming up this week, first week of May, right? We have 4 weeks in May. Some months we get 5 weeks, but this month we got 4 weeks. Let's start the month off strong, right? Be selective, be precise in your decision making. But so far this month, tomorrow's Monday, the 4th. There's no news, so that's like a filter out day. Y'all should already know by now that Mondays are tricky. And if you don't know what I'm talking about, we primarily follow in the Discord. We primarily follow the equities. We look at everything, but we primarily trade and engage the equities, the NASDAQ, the S&P, those markets, because those are hundreds of trillions of dollars flowing through the equities, right? So why not participate, right? Why not participate? Take advantage of price action. Tuesday, we got high impact news, job openings, PMI. They're gonna all of this shit right here on the calendar. I don't care about none of it. All I know is from an algorithmic perspective, these specific times on these specific days, I can anticipate when the market makers are going to inject liquidity into the market. I can anticipate it. I can time it. I know when to get in, get out when the volume comes into the market. That's how we make our money. That's how we make profits. I don't know what. Okay, yeah. And okay, Wednesday, non-farm. Okay, non-farm. So we got a non-farm payroll a week, unemployment rates. So, and then the FOMC speaks on Friday. So that's what's on the calendar so far. Make sure y'all repost on X. Repost. Appreciate it. If y'all on X, y'all come follow me, right? Follow me on X and then come over here on YouTube. Matter of fact, let me do this. Matter of fact, no. If you on X, right, my YouTube channel is in my bio on my X page. So y'all come over here on X, right there, YouTube. I was going to post it in the chat, but I'm not going to do that. All right, so first thing I kind of want to look at, man, let's get into, this is primarily what I want to get into, this national debt. Wait a minute. Nah. I know this ain't random. I just looked at this maybe yesterday, and the U.S. debt said 39 trillion. But now that I'm looking at it, it's saying 43 trillion. So here we are, right? I think, and most people not paying attention to the debt narrative. Just Friday, right? On Friday, this was at 39 trillion. Now that I look up, it's sitting at 43 trillion when the market's open. Can you make that up? Do you think that's random? Sitting at 43 trillion when the market opens, and just on Friday it was showing 39 trillion. I'm not tripping because this is what I themed my live stream on. I was looking at it. I said, oh, it's at 39. I might as well say it's at 40 trillion. But when the market's open, it's sitting at 43 trillion. Where all these trillions come from instantly on this website? Now I know this website ain't accurate, but that's pretty interesting. All right, that's interesting. Let me see. All right, so pretty much I'm focused on the debt. We're going to get into the debt. We need to get into a little history because I still see a lot of people that's not quite educated on the financial system. I'm not going to go too in depth, but I'm going to base it around the debt market and who's in control, the history of it, right? And we're going to tie it into the markets. If y'all want me to look at the markets briefly skim through the markets, and I'm going to come back to the markets, but I want to cover some news first. S&P 500 sitting at 7,200. The Dow Jones, 49,000, which is crazy. Bitcoin sitting at $78,000. The NASDAQ sitting at 27,800. Crude oil sitting at 102. We're talking about WTI crude. Gold currently sitting at 4,600. Gold is kind of at a discount, right? It's kind of at a discount. We're going to look at a little closer in gold. It's an illusion. 86K a second, a whole CPA salary per second. Hell yeah, that's crazy. Shep, it bumped to 43 because someone high up didn't have prenup. That's crazy. That's crazy. How many people we got on X now? 21 people on X. Y'all repost on X, y'all. Y'all repost on X. And then y'all can come in the channel on X as well. Appreciate the follow, Mark Brown. If y'all come over here and follow me, I'm definitely going to give y'all a shout out, right? Definitely going to give y'all a shout out. All right, so those are my basic overview. You know, I didn't really, I'm going to come back to the markets. Let's get into some of the headlines. Where do I want to start? Let's start right here, right? Let's start right here. U.S. national debt surpasses economy size for the first time since World War II. So pretty much the U.S. debt has never been to these levels before. Like I said, bro, I all weekend I've been pondering on, damn, the debt is at 39 trillion. It's pretty much at 40 trillion. And then the market opens here on Sunday and it's sitting at $43 trillion. So that's just insane to me. And it's really higher than that. So we're going to get into it. It's really in the hundreds of trillions. So we're going to get into it. Let's go ahead and play this video right here.
With just 6 months until the midterms, here's something a lot of people are concerned about: affordability and the growing national debt. Definitely key issues for voters.
Oh, yeah. The debt is hitting an historic milestone. Here's Connor Hansen.
For the first time since World War II, the national debt is bigger than the size of the economy. New data from the Bureau of Economic Analysis shows the debt reaching $31.27 trillion at the end of March. That's the debt of about $114,000 per American. At the same time, gross domestic product was estimated to be $31.22 trillion year over year.
There's no question that no country has ever remained a superpower when its debt got too large.
The Congressional Budget Office says increased spending on programs such as Social Security and Medicare, as well as interest payments, are driving the changes. It estimates by 2030, the U.S. could break the all-time record of a 106% debt to GDP ratio set in 1946.
We have the very dangerous situation where we spend more on interest payments on the national debt than we do on national defense.
The White House has downplayed the rising debt, arguing President Trump's economic policies will accelerate growth.
We're doing great, and there's more investment being made in the United States than any country at any time.
Still, lawmakers on Capitol Hill say something must be done. There are multiple bipartisan resolutions making their way through Congress aimed at addressing the deficit.
So yeah, that's the current situation with the administration, right? The current situation with the administration. What about gas prices? What about gas prices? How the oil market will react to? We still have war situations going on as well, so we're gonna get into that. Let's play this.
Welcome back into Live Now from Fox. I'm Shauna Kalafi. We're continuing to follow the impacts of the conflict in the Middle East and the Strait of Hormuz having an impact, of course, on gas prices here in the U.S. Those gas prices hitting all-time record highs in some states, and the national average climbing to the highest level since 2022. For more on this, let's bring in oil analyst Tom Kloza. Thank you so much for being here with us, Tom.
Great to be here.
So let's get an idea of exactly how much we're talking here. Can you give us an idea of some of those prices that we're seeing? What states are breaking the records?
Yeah, well, the fours are wild. We're at about 444 for the national number right now, but states in the Pacific, Washington, for example, are at all-time highs, and we're flirting with all-time highs in the Great Lakes. It has less to do with crude oil in the Great Lakes and more to do with some problems with refineries in that part of the country last week.
And coming up this week, of course, there's a lot of news that we're seeing from the White House. But as of right now, what can we expect in terms of possible increases to come this week? Is it possible that those prices will continue to climb?
I think they'll move up a little bit, but I think the rate or the pace of the increase is going to slow a little bit. You know, the president, I guess about 90 minutes ago, tweeted about what amounts to sort of like a repeat of Dunkirk, except for the vessels in the Persian Gulf that need to get out, you know, not necessarily to deliver oil, but so that people on those tankers have food and water and basic, you know, amenities. So that may kind of give the market a little bit of a pause here. But I want to stress that this is not a market which has gone crazy high because of speculation. There's a lot of actual buying out there and a lot of scrambling to find crude oil at reasonable prices.
And a little bit more about that news that you just mentioned from President Trump. We reported this in the last hour or so. He announced on Truth Social that the U.S. starting tomorrow will begin to help escort some of those ships, not just U.S. ships, but from around the world that are stuck in the Strait of Hormuz right now. That announcement from President Trump, could we see that have an effect on prices here in the U.S.? And how quickly does that translate into prices after we hear these different types of news coming out from the White House?
Well, you know, Shauna, the tweet itself and the news itself sponsored a $2 drop in the price of crude oil and, you know, a 4 or 5 cent drop in the price of diesel and gasoline. But this kind of news a month ago would have probably prompted a $10 or a $15 retreat or something like that. So I do think the market has become inured to, you know, these reports about a breakthrough or whatever. When you really analyze it, okay, it's great to get all of those people on the ships outside of the Persian Gulf so their lives can return to some semblance of normalcy. But it doesn't mean that there's going to be a lot of oil exiting the strait. And at this point, we've lost more than 500 million barrels of oil and about 2.5 million or 250 million barrels of refined products. And that's going to hurt for a long time. It's going to linger on. And, you know, I'm not so sure that we haven't seen the highs yet.
And some areas of the country are seeing some of the highest prices, the West and East Coast, especially. There are concerns in those regions, especially when it comes to the threat of runaway prices. What are the concerns for that threat for the West and East coastal areas?
Well, you know, we talk a lot about energy dominance, and North America is by far the most privileged continent in terms of energy, but we're still dependent upon imports of gasoline on, let's say, the Northeast and in a lot of different products on the West Coast. And we've seen a lot of refineries shut down in the last 5 years in California. So those areas are the areas I would circle as potential problems. Even the Rocky Mountains, which doesn't have a huge population, looks as though they might be facing some problems with gasoline. And we saw last week about 4 refinery issues in the Great Lakes states prompted a move of about 50 cents in gas prices and diesel prices. So we're not through with this. And my goodness, if we get a strong hurricane season or if hurricanes threaten any refineries in Texas, Louisiana, and Mississippi, we'll really be in trouble.
So definitely some concerns even.
Hey, I'm gonna pause it right there because that makes me think. You know what I'm saying? Like, I live in Louisiana. A lot of y'all live in Texas. We are we refine oil, but man, if those natural disasters, bro, the peak of hurricane season. I don't know if y'all ever experienced hurricanes. You know, we are always vulnerable in the Gulf Coast, but if a hurricane slams into the Gulf Coast, y'all might as well say it's a wrap, right? That might just bring down the whole economy. Just, I don't know. It just might. I appreciate y'all joining, right? Appreciate y'all joining. I'm on YouTube and X at the same time. YouTube and X at the same time. So y'all follow me on X if you're on YouTube. If you're on YouTube, you follow me on X if you're on YouTube. If you're on X, follow me on YouTube, right? 20 people over here on YouTube, and I got about 36 people on X. That's pretty good. I appreciate the love. Speaking of oil, right? Speaking of oil, let's come over to the oil market. We just started a new month of May, right? If you're brand new to my channel, I'm a technical analyst. Pretty much a technician when it comes to price action, pretty much. Some of these concepts, you probably heard of them before, but they're useless in certain people's hands. So if you haven't seen nobody properly use these concepts, then you probably wouldn't understand what's going on. So we just started a new month of May. We got 25 days to survive, right? Hopefully the market in oil, hopefully the oil market kind of stabilizes, but hey, I'm still bullish on oil, right? I'm still bullish on oil because I want to see these highs above us. I want to see price reach for those highs above us because there's orders up there, smart money. These people, these institutions, these big entities, they leave behind orders in the market. They have orders resting above the market since 2022, and they got orders in the market since 2008. So they play the long game. So right now we just opened up a new month. I'm gonna wait for another chart to do deep analysis, but let me go down to the weekly. Right on the weekly time frame, you can see all of this in here. This is very high resistance price action. I would never, right, in these moments right now, I would not speculate on oil. Oil is just a market that I observe. I would not touch this. You got to observe it, right? So just by observing it, I'm anticipating it to start moving higher, right? Start moving higher. So let me just highlight this right here. This is a suspension gap. This is a suspension gap. We traded down into it, kind of found support inside of it. Now price is showing signs of wanting to go higher. We just started the new month. First thing I'm looking at on the weekly though, traded down into the BISI, or it's in the family of fair value gaps, suspension gap. Trade down into it, this candle right here, that's a bullish order block right there, right? Because once we traded down into the BISI and traded up, this order block became active right here. Right, that's an active order block. There's no safety on it, right? There's no safety on it. It's active. It can definitely explode, trading back into this order block right there, right? We trade up into it, activated. We opened up this market to this week. We actually gapped down. So if you go to lower time frames of oil, there's a gap. Want me to show you? Let's go down to the 15-minute. When I go down to the 15-minute, you probably can't see it on the weekly, but I could see it on the weekly. And when I drop down to the 15-minute, there it is. So this candle right here, it closes on Friday, right? It closes at about $100 on Friday, and then it gaps down and opens at $99 today, right? It opens at $99 at 6 o'clock. So $100, $99, gap down. If you don't see the gap, let me show you right quick. You take the closing price from Friday, which is right here, and you take the opening price from Sunday. There's the gap right there, right? There's a gap. And then you can see how we're currently trading inside of this gap. Look at the 50% level. You see how we trade right down into that, right? Trade right down into that. When we gapped lower, right? When we opened and we gapped, price traded down, took out this low right here. All right, look to the left. To the left of this wick down, or this gap down, there's a wick low right there. Below that low, there's pending orders. What kind of orders? There are buy orders underneath that. If you're looking at oil, sell side liquidity, they have buy orders resting underneath that. So on Sunday, they gap it down, trade down, swoop up the liquidity, swoop up the liquidity, accumulate, and then they send it higher, and now it's kind of ranging. No, it doesn't touch that. But it's just ranging right now, trying to build up sentiment. I don't trade oil because it's a event-based market. Oil can do some crazy shit on the dime, so I will not touch it. I'm bullish on oil, though. If it comes down, there's more liquidity. Look to the left. Right in here, there's more sell-side liquidity in this price. And there's also buy-side liquidity above us. So oil is 50-50 for me. 50-50. Where is it currently trading? Let's go out to the weekly. Yeah, I'm 50-50 on oil, right? I don't want to touch oil. Go down to the daily. Okay. 50-50 on oil. 50-50 on oil. Go out to the weekly. Bullish on oil. I want to see it start reaching for these equal highs up here. I want to see it get up to about, now that might sound crazy because it's not going to be good for the economy, but I want to see oil reach for $120 a barrel and eventually trade to $130 a barrel. It's going to do it. Just give it time. Remember, I'm going to stamp that, right? It's going to do it. Just give it time. $130 per barrel. I don't know what the world is going to do. They're going to roll over. Make sure y'all subscribe to me on YouTube. If y'all want to tap into the Discord, the link is in the comment section. Right? The link is in the comment section. 40 people on X, 20 people on YouTube. So that's oil right now. It's an illusion. Like $6.50 a gallon. Oh, man. Listen, okay, speaking of oil, speaking of $6.50 a gallon, one of my theories is, Spirit Airline, right? The ghetto airline. I hate to say it's the ghetto airline, but Spirit Airline just went out of business. And I honestly think the rise in oil prices put them out of business. They couldn't sustain it. They were still trying to offer cheap flights, affordable flights for everybody. And the spike in oil pretty much put them out of business. 4.445 in Idaho, $6.50 a gallon. Where you at? It's an illusion. That's crazy. That's crazy. Let me see right quick. If y'all on X, make sure y'all follow me. So that's oil. Now, what I want to start getting into, let's get into something. Let's talk about the debt, man. Let's talk about the debt. Let's come over here to the debt. U.S. clock right here, right? And somebody told me in the chat. Who said that in the chat? Somebody said they just look NorCal, right? NorCal. You said the debt is 39 trillion. Let me look. So it's showing me 43 trillion right now. Refresh. It don't really matter. We can just estimate. I'm gonna say it's just at 40 trillion, right? So the debt market, man. This is I was doing some research over the weekend. Do y'all realize the debt? Okay, it's currently 2026. What was the debt market in 2006? Let's go back to 2006. What was the U.S. debt in 2026? Let's go over here. The U.S., not 2026, 2006, my bad. The U.S. debt, right? The total U.S. national debt at the end of the fiscal year in 2006 was approximately 8.5 trillion. And that was crazy back then. Y'all remember that? Do y'all remember that? 8.5 trillion in 2006, right? 2006, 8.5 trillion. And if we fast forward to today's time, 20 years later, which I remember 2006 like it was yesterday, but 20 years later, here we are sitting at $43 trillion. It's scary, bro. It's scary because who's going to pay the bill? The United States ain't even paying their own bill, right? The true debt, let me show y'all. The true debt for the U.S. is this right here. U.S. total debt, $130 trillion plus. $130 trillion. That's the real debt of the United States, all right? Unfunded debt and interest. Who's going to foot this bill? Make sure y'all subscribe to me on YouTube. Y'all follow me on X as well. I'm streaming on both platforms. Who's going to pay for this debt, right? Let's get into it. Let's come over here. Let's do some history of the debt, right? The U.S. national debt crisis fully explained. Let's get into this. It's about a 10-minute video. I might stop and pause here and there, but let's really understand like where we at in history and time. Night out. Other countries not paying their bills. Nobody paying their bills. That's why this whole game is an illusion. Government's not paying their bills. Corporations not paying their bills. Citizens not paying their bills. Nobody's paying bills, but we still playing this stupid, chaotic game, right? But let me pipe down. Let's get into it. Let's do some history on the debt and where we at, who's in control, etc. Y'all should know this by now. Y'all watching me. Let's get into it.
There's a number that defines our future more than any election, more than any war, and more than any technology. It is a number so large that the human brain struggles to comprehend it. $38 trillion. That is the gross national debt of the United States of America. To put that in perspective, if you spent $1 million every single day since the birth of Jesus Christ, you would not have spent even $1 trillion by today. The United States owes 38 times that amount. For decades, politicians told us that debt doesn't matter. They told us that we owe it to ourselves. They told us that as long as the economy grows, the debt is harmless. They lied. We have now crossed a mathematical event horizon. Today, the United States government spends more money paying interest on its old debt than it spends on its entire national defense. It spends more on interest than it does on health care for veterans. The debt is no longer a tool, it is a predator. It is consuming the economy from the inside out. This is not a political opinion. It is an arithmetic certainty. The trajectory we are on leads to one of three outcomes: a catastrophic default, a brutal austerity that guts the social safety net, or a hyperinflationary collapse that destroys the value of the dollar. Welcome to the Financial Coin Historian.
All right, I want to pause there right quick. Said we got three options, right? We got three options to get out of this. Let's go back right quick. Let's talk about it. We got three options. I want to hear it one more time.
Guts the social safety net, or a hyperinflationary collapse that destroys the value of the dollar.
Y'all let me know in the chat, what is it going to be? A hyperinflationary bubble. Let me see.
This is not a political opinion. It is an arithmetic certainty. The trajectory we are on leads to one of three outcomes: a catastrophic default.
Okay, y'all let me know in the chat. Are we going to have a catastrophic default?
A brutal austerity that guts the social safety net.
A brutal austerity where pretty much everybody just loses it, right? Or a default.
Or a hyperinflationary collapse that destroys the value of the dollar.
That's what I mean. Hyperinflationary collapse. What is going to be? What is going to be? What y'all think is going to happen for the bubble to burst, right? What do y'all think? Make sure y'all hit that like button, subscribe.
Financial Coin Historian. Today, we are presenting the definitive investigation into the U.S. national debt crisis. We will tear apart the balance sheets. We will look at the bond trick the Federal Reserve uses to keep the game going. We will analyze the historical precedents of Rome, Spain, and Britain to show you exactly how empires die when they can no longer pay their bills. And most importantly, we will show you what this means for you, for your savings, your house, your grocery bill, and your children's future. The bill is coming due, and you are the one who has been drafted to pay it. To defeat an enemy, you must first understand it. What exactly is this $38 trillion debt? Is it just money we owe to China? No. The reality is far more complex and dangerous. The national debt is the cumulative total of every deficit the federal government has run since the founding of the republic. It is the sum of every war, every bailout, every tax cut, and every social program that was not paid for with cash on hand. Debt held by the public versus intragovernmental debt. We must distinguish between two types of debt. First, there is debt held by the public. This is about $29 trillion. This is the debt owed to individuals, corporations, the Federal Reserve, and foreign governments. This is the debt that trades on the open market. This is the debt that determines interest rates. Second, there is intergovernmental debt. This is about $7.3 trillion. This is money the government owes to itself, specifically to trust funds like Social Security. Here's the dirty secret. For years, the government collected Social Security taxes from your paycheck. But instead of sitting in a vault, that money was spent. It was spent on wars, on roads, on general budget items. In its place, the Treasury put an IOU, a special non-marketable bond. So, when politicians say the Social Security Trust Fund has trillions of dollars, what they really mean is that it has trillions of dollars of IOUs from a government that is already broke. When the baby boomers retire, which they are doing right now, the government has to find the cash to redeem those IOUs, but the cash isn't there. It has to be borrowed. This is why the debt is exploding now. The demographic bill has arrived. Who owns America? There's a myth that China owns the United States. While China is a major creditor, holding hundreds of billions in treasuries, the reality is that the biggest holders of U.S. debt are domestic, the Federal Reserve. The central bank printed trillions of dollars to buy government bonds, especially after 2008 and 2020. This is their bond trick. Monetizing the debt to keep interest rates low, pension funds and mutual funds. Your retirement account is likely filled with U.S. treasuries. If the debt collapses, your 401k collapses. Foreign investors. Japan and the UK are...
Let's pause right there. If the debt collapses, right, which we all know that day is coming in our lifetime, right? And this is why I pray for my elders, right? My elders. If that debt market collapses, your 401k is gone, right? So you gotta, people are becoming retirement age. You're relying on your 401k. You gotta start making positions. You gotta make moves, right? You gotta think smarter. You gotta protect yourself at the same time if you can. Hell, buying gold and silver, that would be a great hedge against this debt market. So, hey, I just got to make notice of that.
Are also massive holders, but their appetite is waning. As the U.S. weaponizes the dollar through sanctions, foreign nations are diversifying into gold. If they stop buying, who will fill the gap? Why can't we just stop borrowing? Why can't we balance the budget like a household? Because the budget is no longer discretionary. We are living in an era of structural deficits. The shift to mandatory spending. 50 years ago, most of the federal budget was discretionary, meaning Congress voted on it every year. Defense, education, infrastructure. Today, the vast majority of the budget is mandatory. These are payments required by law: Social Security, Medicare, Medicaid, and interest on the debt. Mandatory spending totaled $4.1 trillion in fiscal year 2024. That is more than the entire revenue of the government in some years. This means that even if we cut the defense budget to zero, even if we fired every federal employee and closed every national park, the U.S. government would still be running a deficit. The interest spiral. This is the most terrifying feedback loop. As the debt grows, the interest payments grow. As interest payments grow, the deficit grows. As the deficit grows, the debt grows. We have entered a debt spiral. Under recent interest rate hikes to fight inflation, the cost of servicing the debt doubled. We went from paying $350 billion a year in interest to over $880 billion. And now we are crossing the $1 trillion mark. Think about that. $1 trillion a year. That is wealth being transferred from taxpayers to bondholders. It buys no roads. It educates no children. It defends no borders. It is simply the cost of past mistakes. And it is crowding out everything else. You might be thinking, this is Washington's problem, not mine. But you are paying for it every single day. The debt is not free. It is paid for through the invisible tax of inflation. The $18,000 hit. When the government spends trillions it doesn't have, the Federal Reserve prints the difference. This flood of new money dilutes the value of the dollars in your pocket. This is the classic Cantillon effect. The government gets the money first, you get the higher prices later. Since the massive spending spree of 2021, the cost for the average family of four to purchase the same goods and services has increased by over $18,496 per year. Food prices up 22%, gas prices up 32%, rent up 24%. This is not corporate greed or Putin's price hike. This is the direct mathematical result of increasing the money supply to fund the national debt, the wealth destruction. Long-term economic modeling shows that if this debt trajectory continues, real household wealth will decline by $36,000 per household over the next 30 years. Why? Because government debt sucks up all the available capital in the economy. This is called crowding out. Instead of money going into new businesses, factories, and technologies that create jobs and wealth, it goes into buying treasury bonds to keep the government afloat. The result is a stagnant economy, lower wages, and a lower standard of living for you and your children. We have seen this movie before. The plot never changes. Rome, the denarius debasement. In the 3rd century, the Roman Empire faced a similar crisis. Endless wars and a bloated bureaucracy drained the treasury. The emperors couldn't raise taxes enough to cover the costs. So they debased the currency. They mixed base metals like copper into the silver denarius. By the time of Emperor Diocletian, the currency was worthless. Inflation destroyed the middle class. The trade networks collapsed because no one trusted the money. Rome didn't fall to barbarians initially. It fell to fiscal insolvency. Britain, the post-war debt trap. Britain in 1945 ruled the world, but it was drowning in war debt. Its debt-to-GDP ratio was over 250%. The result? The pound sterling lost its status as the world reserve currency. The empire collapsed. Britain faced decades of austerity, rationing, and economic decline. The U.S. is now approaching debt-to-GDP levels similar to wartime nations, but in peacetime, this...
Wait a minute. I got to pause for a minute, because when Rome collapsed, right, imagine this, right? When Rome collapsed, they went into like the Dark Ages, right? And it took them probably a few centuries to come out of that, right? So, yeah, I got to put this shit in perspective, what we living in right now. We might be okay. Well, I don't think, no, a lot of us not okay, because we can go to TikTok right now and start to see the impacts of what this shit is happening, the influences of the debt right now is impacting everybody in society. But in the next 10, 15, 20 years, like somebody said in the chat, UBI, if society kind of collapsed because of the debt bubble, right, it's going to be we're going to be in the dark ages. That's what I'm trying to say. Some people going to do well off, and then most people are not. So that's that's where we at right now. We at the doorsteps of that. So I'm just saying. I appreciate y'all subscribing. I'm streaming live right now on X and YouTube. If you're on YouTube, hit that like button, subscribe. If you're on X, please repost the live stream. Also follow me on X. If y'all want to get in the Discord in YouTube, the link is in the description. And on X, I posted it in the chat. So I appreciate y'all joining. Definitely hit that subscribe button. Let's go ahead and move on, because I got plenty of these videos I can go over as far as the debt. That's the main topic tonight, the debt market, because it's getting out of hand. It's definitely overinflated, and shit is like, we at the cusp of some disaster, right? Speaking of the debt, right? First thing I like to do, that's the first market I like to analyze, right? When I'm trying to get a macro perspective, the first market I like to analyze is the debt market, right? I come over here to the markets, the charts, and I like to analyze the 30-year and the 10-year bond, right? The 30-year and the 10-year, and I also look at the 10-year yield. I mainly glance at the 30-year, but I do most of my analysis on the 10-year because it's it's the shorter term of the two bonds or the debt instruments. And I like to look at the 10-year bond and the 10-year yield. Let me see. All right. So here we go. I like to look at the 10-year bond and the 10-year yield. So the 10-year bond is selling off, right? The bonds are selling off. Somebody's shorting the bonds. And when they're shorting the bonds, they're printing money. Whenever the bonds are going lower, let's put it in perspective. Whenever the bonds are going lower, they're printing money into the system, right? And that forces the yield to move higher. The yield is the interest rate. The yield likes to move higher. And if the yield goes higher, that forces the dollar to go higher. Let me glance at the dollar. Right now, the dollar is consolidating. I got to do a new analysis because we started the new month of the year, But right now, dollar is just holding, right? You can see the dollar in the holding pattern. This is a monthly time frame. It's been holding since a year ago. Almost June of last year has been sideways in a consolidation, right? So very difficult read unless you move all the way out to the higher time frame. But if something happens to the dollar, well, I'm kind of leaning bearish on the dollar longer term. But if the dollar sells off, I'm aiming for these lows down here, right? Which would be a dramatic sell-off in the dollar. Echelon. Thanks to the Mora, they came out of it. Oh, the Moors? Yeah, you said thanks to the Moors, they came out of it. Yep. Got to know your history. 61 people on X, man. YouTube, y'all slacking, man. 61 people on X. But anyway, we consolidating right now on the dollar sideways, trying to build in sentiment. So whenever we consolidate on the dollar, let's zoom out a little bit. Let me go out to the monthly on the treasuries, the debt. At the top, that's the 10-year. You can see on the 10-year, it's been consolidating sideways for a very long time, right? Very long time. So any little movement in these bonds or in the yield, right? Any little movement in the debt market can trigger a catastrophic event. So that's why it's kind of like at a snail's pace, but it's leaning like it wants to sell off, right? We'll see, man. We'll see. Let me look at the monthly on the 10-year bond right here. All right, as I zoom out on the monthly, let's go out to the 3-month. Got to get a larger perspective. On the 3-month time frame, you can see we have been selling off for a few years. We went down, took out this high right here. Well, we went up, took out this high, buy side liquidity, and we sold off and we dropped down, and now it's been trading lower for several years now, right? And there's still liquidity resting below the market. So it's hard. It's kind of harder to predict what they're going to do with the treasury. I mean, the yields and the bonds. It's harder to predict because it's one of those manually intervened markets that they can always go in there and put their hand into it and influence where it's going to go. So it's one of those markets. It's very manipulated. But right now with this consolidation, I like the sell side where we just drop down to take out the lows, the liquidity below the market. Let me go out to the 6 month. On a 6 month time frame, it's currently trading down inside of a BISI, buy side imbalance, sell side inefficiency, which is a fair value gap. It's trading right down into it right here on the 6 month, right? And it's in an interesting place because it's been consolidating for some years now. The bonds, the treasuries, the 10-year has been in a consolidation for about since 2023. Right, since 2023, it's been in a sideways consolidation, haven't really gone anywhere. So again, what does the Treasury or what does the Fed want to do? They want to continue to print money. If they continue to print money, then I think we see hyperinflation. Right, this market. If this market goes, that's it. That's everything goes. Right. If this market goes, everything goes. So that's why I follow this market. Right, because this market right here influences the entire global system. The 10-year, the 30-year for each respective country, because we're living on a debt system, right? Let's do some more education. That's why I'm trying to do some education on understanding the debt market and who's in power with like the powers that be, right? Let me see. All right, let's play this one right here. 5-minute video. Let's go ahead and get this one out the way. Let's do some little education on the debt market.
The US government just quietly released its own financial statements, and buried inside was something that should have been front page news everywhere. According to the Treasury Department's own numbers, the government has $6 trillion in assets and $47 trillion in liabilities, and that's before they even count Social Security and Medicare. This is the debt bomb nobody's talking about. Let's get into it. All right, so everybody's heard about the national debt. Right now it's sitting around $39 trillion. That's the number that gets thrown around on the news. And yeah, it's a lot, $39 trillion. But here's the thing, that number is actually the pretty version. See, the official debt is what the government owes on its bonds, its bills, its treasury securities. That's the stuff investors hold. But the government has other obligations, money it already owes to federal employees, to veterans, to its own pension funds. When you add all that in, total liabilities hit $47.78 trillion, against just $6.06 trillion in assets. That's a net position of negative $41.7 trillion. This isn't an opinion. It's from the Treasury's own financial statements, released in March 2026 to almost total media silence. And here's what makes it worse. $47 trillion doesn't even include the big one. Social Security and Medicare. These are what economists call off-balance sheet obligations, future promises the government has made but hasn't set aside money for. And the numbers here are almost too big to wrap your head around. The 75-year unfunded obligation for Social Security and Medicare jumped by $10.1 trillion in a single year, from $78.3 trillion in 2024 to $88.4 trillion in 2025. That's basically $1 trillion every 5 weeks, just in promises we can't pay for. So if you stack it all together, the official liabilities, plus those unfunded obligations, you're looking at over $136 trillion in total federal obligations. That's roughly 5 times the entire U.S. economy. Let's put that into real-world terms. The combined net worth of every billionaire on the planet is about $20 trillion. The total cost of every single thing the federal government has ever spent since 1787, every war, every highway, every program, adds up to around $132 trillion. The unfunded liability alone is bigger than that, and those programs? They're running out of runway fast. Social Security's trust fund is projected to be depleted by 2033. That's 7 years from now. At that point, by law, benefits get automatically cut by 21%. Medicare's hospital fund runs dry a few years after that. Millions of seniors counting on those checks. That's not a theoretical problem. That's a ticking clock. Now here's where this gets even messier, because we're not just dealing with a debt problem. We're dealing with a debt that's actively getting more expensive to carry. Interest payments on the national debt hit $1.2 trillion in fiscal year 2025. Let that sink in. $1.2 $1.2 trillion just in interest. That's more than what we spend on Medicare, more than the entire defense budget, and the CBO says that number is going to grow 76% over the next decade, hitting $1.8 trillion annually by 2035. So think about it like this. Imagine you've got a credit card balance that's growing, the interest rate just went up, and your minimum payment now costs more than your rent. That's basically where the federal government is sitting right now. And deficits aren't slowing down either. The FY 2025 deficit was $1.8 trillion. The CBO project's deficits will top $2 trillion every single year for the next decade. Every year, at minimum. Now, I want to be real with you. This isn't some overnight collapse kind of situation. This is the slow boil version. Ernest Hemingway once wrote about going bankrupt 2 ways, gradually, then suddenly. That's actually the best description of what's happening here. The gradual version looks like this. Interest payments keep crowding out everything else. Schools, infrastructure, research, they all get squeezed. Your income grows slower. Your dollar buys less over time. The economy quietly loses steam, and most people don't even know why they feel broke. The sudden version is what nobody wants to say out loud, a fiscal crisis. That's when investors start losing confidence in U.S. Bonds, interest rates spike. Institutions that hold government debt, banks, pensions, insurance companies, start taking massive losses. The dollar's status as the world's reserve currency gets shaky. And at that point, the options are brutal. Massive tax hikes, massive spending cuts, or both at the same time in the middle of a crisis. The Penn-Wharton budget model actually ran the math on this. They found that if debt held by the public hits 200% of GDP, there's no amount of tax increases or spending cuts that can prevent a default. We're at 100% right now. And the CBO projects we hit 175% by 2056 if nothing changes. So where does that leave us? The government's own GAO has now issued a disclaimer on federal financial statements for the 29th consecutive year, meaning they literally can't confirm the books are accurate. The debt ceiling just got raised to $41.1 trillion, and Congress, by most accounts, can't agree on the basics. The thing is, none of this has to end in catastrophe. But the window to make real changes without serious pain keeps getting smaller. Every year we kick the can, the math gets harder. This is one of those stories where the numbers are so big they stop feeling real. But they are real, and the people who will feel it most are the ones who don't even know this conversation is happening. That's what Frontline is here for. If this video opens your eyes...
Yeah, man. That's the current situation. It's really worse than what you think, right? That's where we at. Right. So when it comes to the markets, we are scrambling to play musical chairs to get. First of all, you gotta get the income to be able to play. Right. So you gotta have a good paying job. You gotta be a hustler to in order to because the situation, the debt is getting out of hand, and people with the money, they're buying up every asset known to man. I think it's one of those It's not going to be a crash. It might be one of those slow boiling things like the guy said in the video. It's slow boiling, and you're going to feel it. The next few generations, you're going to feel it, right? We're feeling it now, but our kids, they're going to be really, they're probably going to be slaves, man. But I don't like to harp on the negative. I appreciate y'all joining. Make sure y'all hit that like button, subscribe. Let's come over to X. Let's get into some like headlines, some things that I've seen. I appreciate y'all joining. Make sure y'all hit that like button, subscribe. Gonna get into the markets here shortly. Almost 70 people on X. YouTube is a little slow, right? I don't know what's going on YouTube. Just in, Air Canada has canceled all of its international flights until July due to fuel shortages. Due to fuel shortages. So even over there in India, right, they're canceling flights just like Spirit Airlines. Trump is willing to provide taxpayer-funded bailout for Spirit Airlines as part of a new deal he is cooking up. Let's see what they're talking about this. There was also rumors of Elon Musk buying Spirit Airlines, calling it Spirit X. I don't know. We shall see. Let's play.
Considering a taxpayer-funded deal that could help bail out Spirit Airlines. The president says his administration has made a, quote, final proposal and expects an announcement soon, but insists any agreement would only move forward if it's a good deal for the country. Meanwhile, Spirit has been struggling financially, and critics are questioning whether federal support would amount to a taxpayer bailout. But if Spirit does fail, What happens next? New Jersey reporter Tony Gates live at Newark Airport with some answers. Tony?
And Sade, we just watched a Spirit Airlines flight take off at 4:07 this afternoon here at Newark Liberty Airport. So right now it is business as usual, though some of the customers we spoke to are wondering what is next when it comes to this airline and what will happen with their return trips home.
My branch manager had told me about them closing down or shutting down. But that's the only thing that I heard.
Josie Lopez and her younger brother Marcus traveled from Austin, Texas to spend the weekend in Times Square. They have round-trip tickets on Spirit Airlines, hoping they'll be able to enjoy the Big Apple and return home with no travel troubles.
As long as they get back home, that's all that matters.
Spirit has been in last-ditch effort talks for a government bailout, reportedly asking the Trump administration for a $500 million package.
Well, I guess we're looking at it. If we could do it, we'd do it, but only if it's a good deal.
The plan has apparently hit a curb with some of its bondholders. Our ABC investigators reported earlier this week that the airline could run out of money in a matter of days. Other published reports say the airline is preparing to cease operations. An abrupt halt could leave its ticket holders scrambling to book on other airlines to complete itineraries. Other airlines are stepping up on standby. American Airlines saying in part it immediately implemented fare caps on main cabin tickets for Spirit routes where American also offers nonstop service. And United saying it's preparing to support Spirit customers in the event of a shutdown, with more information to come. The Lopez duo says this is the first time they'd flown on Spirit and were far from impressed.
I'm gonna be honest, I didn't like the service. Yeah. You know, it's not the same as Southwest Airlines.
Yeah, they charge for everything.
So you wouldn't be surprised to hear they might be shutting down because
I'm just praying that we make it back home. We're just here for the weekend, so.
Well, a Spirit Airlines spokesperson says, quote, Spirit is operating as usual. How long that will last and whether or not this funding package comes through are still up in the air. For now, we're live.
How many of y'all fly Spirit, man? How many of y'all fly Spirit? Tell me what your experience is in the chat if y'all ever flown Spirit. Let's see. What else? GameStop. Breaking news. GameStop has put out an offer to buy eBay for $56 billion. Y'all might want to look in that. eBay. Does eBay have a ticker? Y'all let me know if eBay has a ticker. Let's go look. I'm sure they do. Let's see. Is eBay still trading? Let's go look. What chart? What chart? Right here. Let's go look and see if eBay has a ticker. Y'all let me know in the chat if they do. Appreciate y'all joining. eBay. Yeah, they do. I'm tripping. Yeah, of course they do. Let's come look at eBay, right? Let's come look at eBay. I don't know. This might be an alley-oop for some of y'all. Y'all might want to look into it. eBay currently trading at $104 per share. $104 per share. Let's go out to the monthly time frame. On the monthly time frame, it's been perpetually bullish. It's at a premium. I would not touch this right now, right? So they put out headlines. How many people y'all think bought the news on eBay? Or let me see. How many people you think bought the news on GameStop buying eBay, right? How many of y'all thought that's the driver of the market? Let me come back to eBay. So the last discount opportunity on eBay came in October 2025. That was, it would retrace inside of a fair value gap, right? Retrace inside of a fair value gap back in October 2025. That's when they offered a opportunity to get long discount. They offered it around $81 per share. They even dropped it down to about $78 per share. Now it's sitting at $104 per share, right? So that's eBay. I don't know how much breaking news that is because it's not at a discount. I would not be buying it. People gonna buy that and later on get caught off guard because it's gonna retrace, and you might not get the best entry. It's an illusion. The U.S. government tried to buy 90% of Spirit for $500 million. That's crazy. What was they gonna do with it? Make sure y'all come over here and follow me on X. If you're on X, follow me on YouTube. All right, follow me on YouTube. Let me come back over to X. Let's see. I can't believe we used to throw toilet paper and eggs at houses, and now we can't afford toilet paper and eggs or a house. That's what I'm saying. Y'all get it? The debt market, right? Yeah, I remember when I was in high school, right? People used to go throw toilet paper on people's yards and shit and trees, and that was a thing. Yeah, we was kind of rebellious, right? We was kind of out there, but you know, people used to throw eggs at people's cars and houses, and we said we didn't see the value in eggs and shit like that and toilet paper, right? I know we have like a rivalry homecoming game against our crosstown rivals in sports. And whenever we had those crosstown rivalries, one school would go toilet paper the other school, right? That's the type of things they used to do. They'll go toilet paper the other school, and then, you know, people got to clean it up. But we didn't value the toilet paper. We didn't value the eggs, right? And now here we are, grown adults, right? And we looking at like, damn, toilet paper or eggs? Which one you gonna buy? I'm buying the toilet paper, right? I don't know. Some people might be different. But yeah, that's crazy. JP Morgan CEO says crypto has surpassed today's financial system. This is no longer a test. Get your bags ready. This might be old. Y'all let me know in the chat. Is this new or old? I don't want to click it. It say May 2nd. I don't see no date on it. Let's go ahead and see what Jamie Dimon has to say.
Blockchain is real. It's been around for quite a while, but now it's becoming more effective, more efficient because people are...
I guess it stopped. Let me see.
Blockchain is real. It's been around for quite a while, but now it's becoming more effective, more efficient because people are...
All right, that was the clip. Let's see. LeBron James, right?
Blockchain is real. It's been around for quite a while, but now it's becoming more effective. Around for quite a while.
All right. LeBron James, when you short the market and it ripped Sunday night because Iran agreed to open the strait for the 13th time, right? Right. How many of y'all are tired? The Iran, the war is on, the war is off. This is how I pretty much feel every time they announce it, right? Because we trying to get a good entry in the market, but guess what? They keep fucking manipulating the market. Speaking of manipulating the market, we got Donald Trump. He sold, now pump it. You know, how many times this week alone is he gonna do this? Right? How many times a week is he gonna do that right there? That's crazy. Let's see. Warren Buffett just predicted the biggest market crash. We never had people in a more gambling mood than now. A much larger decline is ahead. He is selling millions in risk assets and holds a record amount of cash, roughly around $400 billion. He knows something bad is happening, right? Coming. He knows something bad is coming. Let's hear what Warren Buffett has to say. A lot of people still like to rely on Warren Buffett and his methods. And a lot of people relying on him. He's been looking like this since I was a kid. I don't recall him looking any younger. He's been the same. So what are these people using to stay alive this long?
Things to do, and then the question is to find one that makes sense. And there may be 20 out there that make sense that you don't understand, and you just leave them alone.
You said that the world or the surrounding environment is not ideal, and I guess that points to the idea that there's almost $400 billion in cash on hand, although Greg took some pains to show it's really more like $380 billion in cash on hand. Yeah. But there's a lot of cash on hand, and you're still active in managing the portfolio, too, and looking at stocks. You're looking around, and you don't see a lot that you want to invest in.
No. Well, then we don't do anything. I mean, we've been of the 60 years I've been in the business, there's probably 5 of them been really juicy, and I think it was Tom Watson Sr. of IBM that said, they asked him the reason why IBM had been so successful or something like that, and he said, I'm smart at spots and I stay around those spots. And that's the whole thing. And IBM was in 3 different businesses, including time clocks and and 2 of the 3 turned out to be no good. But so they just focused on the one.
What is it when you look around that it's just prices are too high at this point? I would imagine Greg said this from the stage too. Yeah. There are businesses that you like, just not these prices.
And I would say I understand fewer of the businesses as a percentage of the whole than I did 10 years ago. I have not learned new industries for some years, and so I don't kid myself on that. I'm not going to learn them. I'm not going to have an edge on, a whole bunch of younger people that have actually grown up with them, used the product, seen things, but well, as I mentioned, you don't have to understand too many if they're like Apple.
But looking around, let's just get some macro thoughts on this, because I don't know that this is something that Greg is going to comment on per se. Just looking at the macro stock market environment, what does this feel like to you? Does it feel expensive? Does it feel like there are opportunities in some places?
Well, it feels like, I've compared the markets to a church with a casino attached, and people can move between the church and casino, and I would say there are more people in the church and more people in the casino, but the casino's gotten very attractive to people. If you're buying one-day options or selling them, I mean, that's not investing, it's not speculating, it's gambling, just totally. There's nobody that can explain why they're buying an option for one day, unless they maybe the fellow that made the $400 and some $1,000 from knowing when we were going into Venezuela can do it. But I mean, that's pretty, and the quantity of those things is just incredible. So we've never had people in a more gambling mood than now. But that doesn't mean that investing is terrible. It does mean that.
All right, no disrespect. He's taking a little time, right? He's a little older, but can y'all see that his way of thinking? He's saying pretty much like he don't understand why people are in this gambling mood and this gambling mindset. And remember, he made his money real early on. He got old money, so he got that senior citizen money. And my generation, right, and younger, we got to make money right now, right? We don't have time. So the method of investing has changed dramatically. We don't have time. We day to day with this. We need the money now. Everybody in here needs some money fucking right now. We don't have billions, Warren Buffett, right? We don't have billions. I hate, bro, these people, these billionaires be losing perspective sometimes. Now, I get what he's saying, but he also said, I don't understand how people are in this gambling mode, but at the same time, he don't see nothing in the stock market worth holding right now, right? So, and he knows that this shit is at premiums and these markets are at all-time highs. So you got to listen real closely, because, these people are deceiving. Even Warren Buffett, he doesn't understand. He knows why. Come on now, let's be real. He knows why people take day trades, right? He knows why people day trade, because there's massive opportunity. He might not can do it, but there's many people that day trade, right? And they can make a lot of fucking money. For example, institutions like BlackRock, their whole method is completely opposite of what Warren Buffett method is. So that is what it is. Make sure y'all hit that like button, subscribe. Let's keep it moving. Let's keep it moving on X. For my conspiracy people, right? Shocking. Data centers powered by human brain cells. Let that headline hit you. This isn't sci-fi anymore, right? I'm gonna let y'all deep dive into this. No, not metaphor, not theory, not some distant future, right now. So they're pretty much saying data centers powered by human brain cells. That to me sounds like the fucking Matrix, right? That sounds like the Matrix. Y'all remember in the Matrix when they had the bodies in the tanks? Well, is that what we coming to with the data centers? Are they gonna plug it? Are the data centers the data centers the Matrix, right? Like when they found Neo, when they discovered him outside of the Matrix and they had to go save him. Is that what we turn into? I'm gonna let y'all speculate on that. Let's see. The US dollar system. This is pretty interesting right here. Let me look at this. International regulations, supranationals, offshore euro dealer. So yeah, the dollar system. I might post this in the Discord for y'all to take a little closer look. If you want to get access to the Discord, the link is in the chat for both YouTube and X. Right? Y'all come over there, mess with the community. Canada to remove 4,000 Bitcoin ATMs across the country. I wonder why they're doing that. Canada removing ATM machines. Let's see what else. Again, Spirit Airlines officially shuts down, but then there's reports that they're still working. So I don't know. They also say Spirit Airlines has 0 fatal crashes, very cheap flights, strong safety record, modern planes, consistent deals, easy booking, simple pricing model. So, but a little oil spike put them out of business, in my honest opinion. Oil spiking higher kind of put them out of business. Make sure y'all repost on X. I know there's a lot of bots on X. Ain't no way. U.S. major airline passengers watching Spirit customers board their flight, right? So, yeah, people that was flying Spirit, now you got to fly American, Delta, United. And for y'all that been flying American, Delta, United, this is y'all. Y'all acting real bougie, right? Don't act bougie. That people got to fly now. Y'all share, right? Y'all share. Don't be acting all stuck up because you've been flying for 10 years and you got your points. Right, y'all gotta come on now. Let some other citizens fly. So don't act all bougie. 90% of traders lose because they trade blind. Price only does 4 things. Again, this is what I go over. Let's see. We are still early. Crypto people, right? Right now, the market cap for crypto roughly around 2 trillion. Gold market cap around 35 trillion. But guess what? The global stock market right now 140 trillion, and the debt 136 trillion. Elon Musk is reportedly in talks of acquiring Spirit Airlines with ambitious plans to revolutionize the air travel experience. That's that. What's up, Bree? What's up? I'm just on here clowning, right? Money glitch caught in 4K. So y'all, my student people, right? Y'all, wait. I don't know. He's scamming, bro. He's scamming. Let's see. Breaking news, China is likely to replace the United States as the global leader, right? Remember, I'm gonna go over some more documentary, educational, just trying to understand the debt market, because money always transfers. Once they're done with one nation, they'll transfer all the wealth to another nation and bring them up. That's what central banks do. They are running the debt up crazy, right? Just to switch powers. They've done that throughout history. So the United States is not an exception. That's why y'all need to be grinding, planning accordingly, doing the right investing, and also learning the skill set that I teach y'all, right? Y'all want to be kind of prepared for it. Let's see. I got some graphic shit on here. I don't want to, X get kind of wild, right? For example, like this, when men need money, when shorties need money, right? So, I'm not being sexist to the women out there. I'm just saying, right? And shout out to the hardworking women that don't need money like that, right? Shout out to y'all. Y'all doing your thing. But when men need money and when women need money, but I'm gonna keep it moving on that. Atlanta is now one of the most surveilled cities in the world as it rolls out AI powered policing. Right? Atlanta is now one of the most surveilled cities in the world because it's rolling out AI powered policing. Surveillance doesn't stop crime. 2010, Atlanta began expanding its camera network. And I've seen this pretty much nationwide. Every state, every city that I go to, I do see the camera networks popping up. We already know artificial intelligence. China is already doing this. So they're slowly implementing this into the United States. So nothing new here, right? We know that's coming. Let's see. I already went over Warren Buffett, Trump. Thoughts. So if you could live like, let's say you're a trader, right? And you can pick a lifestyle, 3,000 a month in New York, or would you take 3,000 a month in Bali? Which one would you take? Would you sacrifice, cause we're American, right? So we kind of, most of us. So would you pay 3,000 a month in New York, or would you take the opportunity to take 3,000 to Bali? It's kind of obvious, but most people aren't willing to take that leap. But if you learn this skill set of technical analysis and trading that I cover, right, the sky's the limit. You can be anywhere. You can be a nomad. We're gonna get into the charts here shortly. Y'all be patient. I'm just trying to get through the headlines, make it a little entertaining. Because once I go to charts, I already know everybody's gonna leave, right? Most people gonna leave because this shit is dry. Let me read the chats. AWB Palantir has entered the chat for sure. You be sharing an apartment with rats in New York. Yep. I agree. Almost 80 people on X. YouTube slacking, man. I don't know what it is. China bans OnlyFans, calling it a corrupt Western disease. That's one thing I can agree with China on, right? We need to go ahead and get rid of OnlyFans, right? Or if people can use it for better things, I would say that. Breaking news, China says it will impose 100% tariffs on the U.S. goods in China. That's not going to be good. China is now openly rejecting all U.S. sanctions on Iranian oil and says it won't comply. That's a direct refusal to follow the rules that Washington built its power on. Sanctions won't work on force or obedience. And when major economies stop recognizing them, that entire system disintegrates. Less compliance, less leverage, less control, less power, less influence, etc. The global shift, the rules aren't being followed. BRICS, right? This is an interesting battle, right? We shall see. Again, the debt is getting crazy. Let's see. China is preparing to approve the Russian cancer vaccine, which could disrupt the 2.6 trillion Western medical industry. That's crazy. China is preparing to approve the Russian cancer vaccine. So I guess they're claiming they can beat cancer. The New World Order UN Agenda 2030, right? We almost there, y'all. Y'all hold on, y'all strap in, y'all buckle up, because we almost there. One world government, end of nations, one world army. One world police force. We're not there yet. End of family union. We're there pretty much. The one world central bank. They're establishing in that. One world cashless currency. God damn it, man. Y'all strap up. Get what y'all need, right? Because it's getting hard. End of all private property. World depopulation and fertility control. That's crazy. End of home and car ownership. Mandatory multiple vaccines yearly over my dead body, right? Universal austerity income. I'm guessing that's universal basic income. Social media, digital ID, microchip for health, shopping and travel. Damn. Y'all complying? Implementation of Chinese social credit system, government raised children. Damn. All businesses run by the state. Okay, this is getting crazy. I'm getting a phone call, y'all. Listen, I got a phone call. I'm going to come back. Y'all be patient. But in the meantime, let's play some history. Let's do this right quick. I'm coming right back.
Every politician promises to fix the debt. Every news anchor breathlessly reports the latest trillion-dollar milestone. And every American is told to worry about the crushing burden we're leaving our children. But what if I told you that almost everything you think you know about America's debt is a carefully crafted illusion? What if the real story isn't about owing money to foreign powers, but about a system so complex that even the people running it don't fully understand how it works? The number is staggering, $34 trillion. Written out, that's 34 followed by 12 zeros. It's a figure so massive that your brain can't really process it. To put it in perspective, if you spent $1 million every single day, it would take you over 90,000 years to spend 34 trillion. If you stacked $34 trillion bills, the pile would reach beyond the moon. It's more money than most countries will produce in centuries of economic activity. And yet here's the twist that should make you question everything. America doesn't owe this money to China or Japan or any foreign enemy plotting our downfall. The largest creditor of the United States government isn't some shadowy international cartel or a collection of oil-rich dictators. The largest creditor is America itself. The Treasury owes most of this astronomical sum to other parts of the American government, American institutions, and American citizens. It's the financial equivalent of writing yourself an IOU and then panicking about how you'll pay yourself back. This isn't some accounting trick or bureaucratic sleight of hand. This is the foundation of how modern money actually works. And the implications are so profound that they challenge every assumption about debt, spending, and economic policy that you've been taught to believe. Because when you understand who really holds America's debt, you start to realize that the entire conversation about fiscal responsibility has been missing the most important piece of the puzzle. Let's start with the biggest holder of American debt, the one that makes the whole system possible. The Federal Reserve, America's central bank, owns over $5 trillion of government bonds. Think about what that means for a moment. The Federal Reserve is technically independent, but it's still part of the American government system. It's an institution created by Congress, with governors appointed by the president. When the Fed buys bonds from the Treasury, it's essentially one part money to another part of the government lending the government. And here's the kicker. The Fed created that buy those bonds in money out of thin air to the first place. This isn't some conspiracy far theory orange economic concept. This is exactly how the system is designed to work. The Treasury issues bonds, the Fed buys them with newly created money, and the interest payments flow back to the Treasury at the end of each year after the Fed covers its operating expenses. It's a closed loop where the government borrows money from itself, pays interest to itself, and receives most of that interest back. The debt is real on paper, but the actual burden is largely imaginary. But the Fed is just the beginning. Social Security holds over $2.5 trillion in Treasury bonds. Medicare holds hundreds of billions more. These aren't foreign investments or private sector holdings. These are government programs that have accumulated surpluses over the decades and, by law, must invest those surpluses in government bonds. When politicians talk about Social Security being broke, what they really mean is that one part of the government will eventually need to pay back money it borrowed from another part of the government. Think about the absurdity of this for a moment. The same entity that creates the money, collects the taxes, and writes the laws also owes money to itself and worries about paying itself back. It's like worrying about the debt you owe to your own savings account. The mechanics might be complex, but the fundamental relationship is simple. You can't go broke owing money to yourself. Then there are American citizens and institutions. Pension funds, insurance companies, banks, and individual investors hold trillions more in Treasury bonds. These aren't foreign creditors demanding payment in gold or threatening to invade if we default. These are Americans who have chosen to lend money to their own government because they view it as the safest possible investment. When a retiree buys a savings bond or a pension fund purchases Treasury bills, they're not contributing to some national crisis. They're participating in a system where American savings flow to American infrastructure, American defense, and American social programs. The entire narrative around foreign ownership of American debt has been wildly exaggerated. Yes, countries like China and Japan hold significant amounts of Treasury bonds, but they represent less than a quarter of total debt. And even that ownership isn't some sinister plot to control America. Foreign governments buy Treasury bonds for the same reason everyone else does. They're the safest, most liquid investment in the world. When China holds Treasury bonds, it's not holding America hostage. It's holding dollars that it earned from trade and choosing to park them in the safest possible place. The real question isn't who we owe money to. The real question is why this system exists in the first place and what it actually accomplishes. Because when you follow the money, you discover that government debt serves a completely different purpose than household debt or business debt. It's not about borrowing money you don't have to buy things you can't afford. It's about creating the financial infrastructure that makes modern commerce possible. Every dollar in your wallet, every digit in your bank account, every electronic payment you make exists because the government issued debt to create it. The money supply isn't backed by gold sitting in some vault. It's backed by the full faith and credit of the United States, which is really just another way of saying it's backed by the government's ability to tax and spend and regulate the economy. Treasury bonds aren't just investments. They're the foundation of the entire monetary system. Banks need safe assets to balance their books. Insurance companies need predictable returns to pay future claims. Pension funds need steady income to pay retirees. Foreign governments need a place to park their dollar reserves. Treasury bonds serve all these functions simultaneously, creating a web of financial relationships that keeps money flowing through the economy. Without government debt, there wouldn't be enough safe assets to go around, and the financial system would seize up like an engine without oil. But here's where the story gets even more interesting. The government doesn't just issue debt to fund spending. It issues debt to control the money supply, to influence interest rates, and to provide stability in an inherently unstable system. When the economy overheats, the government can sell bonds to soak up excess money. When the economy slows down, it can buy bonds to inject money back into circulation. The debt isn't a burden to be minimized. It's a tool to be managed. This is why every attempt to eliminate the national debt has failed throughout American history. It's not because politicians lack willpower or because voters demand too much spending. It's because eliminating the debt would eliminate the foundation of the financial system itself. The few times in history when the federal government has run sustained surpluses and paid down significant amounts of debt, the result has been financial panic and economic recession. The economy literally depends on government debt to function. And yet, the political conversation remains stuck in outdated metaphors about household budgets and fiscal responsibility. Politicians who understand exactly how the system works still speak as if the government were a family trying to balance its checkbook. The media reports on debt ceiling debates as if they were real constraints rather than political theatre. Economic commentators warn about burdening future generations with debt that those same future generations will largely owe to themselves. The $34 trillion figure that dominates headlines isn't a measure of national weakness or impending collapse. It's a measure of how much safe, liquid, interest-bearing assets the American government has created for the world economy. It represents the accumulated savings of millions of Americans, the reserves of thousands of institutions, and the foundation of global commerce. The debt isn't what we owe to others. It's what others owe us for creating and maintaining the world's most stable and trusted financial system. This revelation changes everything about how we should think about government spending, taxation, and economic policy. When you realize that the debt is mostly money we owe to ourselves, the traditional arguments about fiscal restraint start to crumble. The question isn't whether we can afford to spend money on infrastructure, education, or healthcare. The question is whether we have the real resources, the workers, materials, and productive capacity to accomplish what we want to do. Consider what happens when the government spends money into existence. Congress appropriates funds for a highway project. The Treasury instructs the Federal Reserve to credit the construction company's bank account with newly created dollars. Those dollars didn't come from taxpayers or foreign lenders. They were created electronically, instantly, with keystrokes. The company uses those dollars to buy materials, pay workers, and purchase equipment. The money flows through the economy, creating jobs, generating income, and producing something of real value, a highway that will serve the public for decades. The debt increases on paper, but what actually happened? Resources were mobilized, people were employed, and the nation's productive capacity expanded. The government didn't borrow prosperity from the future. It created prosperity in the present. The bond that represents this spending sits in someone's portfolio as a safe asset, earning interest and providing financial stability. Everyone wins, except for the politicians who get to complain about the deficit for campaign purposes. This is why the debt ceiling debates are pure political theatre. The ceiling isn't a real constraint on government spending. It's an artificial limit that Congress imposed on itself and can change whenever it wants. When politicians threaten to default on the debt rather than raise the ceiling, they're not protecting taxpayers from excessive spending. They're threatening to destroy the full faith and credit of the United States for no economic purpose whatsoever. It's like threatening to burn down your house because you don't like the mortgage payment, except the mortgage is to yourself and the house is the foundation of global commerce. The real constraints on government spending aren't financial, they're physical and political. If the government tries to spend more money than the economy can productively absorb, the result is inflation. Too much money chasing too few goods drives up prices, which is a real cost that affects everyone. But inflation isn't caused by debt or deficits. It's caused by spending beyond the economy's productive capacity. You can have massive deficits without inflation if there are unemployed resources to put to work. You can have inflation with balanced budgets if you're trying to squeeze too much activity out of a fully employed economy. This understanding completely reframes the inflation we've experienced in recent years. Prices didn't rise because the government borrowed too much money. They rose because supply chains broke down, energy markets were disrupted, and corporate concentration allowed companies to raise prices beyond what competitive markets would normally support. The inflation was real, but the cause wasn't excessive debt. It was disrupted production and distribution networks. The same logic applies to interest payments on the debt. Every year, the Treasury pays hundreds of billions in interest to bondholders. Politicians point to this as money wasted on past spending, resources that could have gone to productive uses. But think about where that interest actually goes. Most of it flows to American savers, pension funds, and financial institutions. It's not money disappearing into a black hole. It's money recycling through the economy, providing income to retirees, returns to investors, and stability to financial markets. When the Federal Reserve holds government bonds, the interest payments flow back to the Treasury after expenses. When Social Security holds bonds, the interest helps fund benefits for current retirees. When American citizens hold bonds, the interest provides safe income in an uncertain world. Even when foreign governments hold bonds, they typically spend the interest payments on American goods and services, supporting American jobs and businesses. The interest isn't a burden. It's a feature of the system that distributes income and maintains stability. But perhaps the most profound implication of understanding government debt is what it reveals about taxation. Politicians and economists often speak as if taxes fund government spending, as if the Treasury collects money from citizens and then redistributes it to pay for programs, but in a system where the government creates money to spend and then collects some of it back through taxes, the relationship is exactly backwards. Spending comes first. The government creates money to buy goods, services, and labor. Only after that money is circulating through the economy can taxes collect some of it back. Taxes don't fund spending. Taxes regulate the money supply. They pull excess money out of circulation to prevent inflation and to maintain the currency's value. They also serve important social functions, redistributing income and influencing behavior. But they don't provide the resources for government operations in any mechanical sense. This is why debates about whether we can afford social programs or infrastructure investments the point entirely. The question isn't Miss Ayers can fund whether tax PD these programs. The question is whether the economy has the real capacity to deliver them without triggering inflation. If we have unemployed workers, unused factories, and unmet needs, then government spending can put those resources to productive use, regardless of the tax revenue or debt implications. The implications extend far beyond domestic policy. America's role as the issuer of the world's reserve currency gives it extraordinary power and responsibility. When other countries accumulate dollars from trade, they need somewhere safe to invest them. Treasury bonds serve this function, allowing the global economy to operate smoothly while providing the United States with what economists call an exorbitant privilege, the ability to import more than it exports by creating money that others want to hold. This privilege comes with obligations. The United States must maintain the institutions, laws, and policies that make the dollar trustworthy. It must provide enough Treasury bonds to meet global demand for safe assets. And it must resist the temptation to abuse its monetary power in ways that would undermine confidence in the system. The debt isn't a sign of weakness. It's a sign of the dollar's strength and the world's faith in American institutions. Foreign countries don't hold Treasury bonds because they're naive or because they're trying to control America. They hold them because they need safe, liquid assets denominated in the world's most important currency. When China accumulates Treasury bonds, it's not gaining leverage over American policy. It's becoming dependent on American financial stability. If anything, foreign ownership of Treasury bonds gives the United States more influence over global economic conditions, not less. The $34 trillion debt represents something unprecedented in human history, a financial system so large, complex, and interconnected that it has transcended traditional notions of borrowing and lending. It's not a burden that weighs down the economy. It's the infrastructure that makes modern economic life possible. Every mortgage, every corporate bond, every bank loan, every retirement account depends on the foundation of Treasury bonds that provide stability, liquidity, and safety in an inherently risky world. Understanding this system doesn't mean that all government spending is wise or that fiscal policy doesn't matter. Resources are still limited, choices still have consequences, and bad policies can still cause real harm. But the constraints are different than what most people imagine. The question isn't whether we can afford to invest in our future. The question is whether we can afford not to. So the next time you hear a politician warning about the crushing debt burden, or an economist predicting fiscal apocalypse, or a news anchor breathlessly reporting the latest trillion-dollar milestone, remember what you've learned here. The $34 trillion debt isn't a bomb waiting to explode. It's the foundation that holds everything together. America doesn't owe this money to foreign powers plotting its downfall. America owes it to Americans, to institutions that depend on stability, and to a global system that relies on the dollar's strength. The real illusion isn't the debt itself. The real illusion is the belief that government finances work like household finances, that money is scarce when it can be created, that debt to yourself is the same as debt to strangers. Once you see through that illusion, everything changes. The constraints become real constraints about resources and productivity, not imaginary constraints about borrowing limits and deficit spending. The debates become about what we should build, not whether we can afford to build it. The system is more fragile than its defenders admit, and more resilient than its critics claim. But most importantly, it's ours. The $34 trillion debt isn't what we owe to the world. It's what the world owes to us for creating and maintaining the financial infrastructure that makes modern civilization possible. And that's a debt that can never be fully repaid. If this changed how you think about money and power, hit subscribe. The truth.
All right, man. I appreciate y'all being patient. I was going to cut that one short, but I think that was very educational. Hopefully you learned something about the debt market in this current situation that we're in. definitely educational. You cannot go wrong with just educating yourself and kind of getting up to speed on what the fuck is going on, right? This is the type of stuff I had to do when I wanted to learn. So I kind of watch these documentaries, kind of get informed about the life that we live in. I appreciate y'all joining. Make sure y'all subscribe on YouTube, right? Subscribe, hit that like button. If y'all on X, make sure y'all follow, subscribe. 91 people on X. Shout out to y'all. To be honest, I think it's a bunch of bots. Y'all press 1. If you're on X, press 1. If you're not a bot, press 1 if you're not a bot on X. If you're over here on X, press 1. And if you're brand new, make sure y'all hit that follow button. Let's come over here and get to the charts. Let's get to the chart. So where do I want to start? I pretty much went over oil. Let's start on the equities, right? You can see the markets continue to perpetually go higher. Equities pushing higher. Before I start, man, I need to see some engagement, right? I need to see some engagement. Gotta make sure people are in here. If you on X, press 1. If you're on YouTube, press 1. Let me know. Let me get some feedback. Because I'm about to go into the analysis side, and I'm gonna be brief with it. All right, what's up, Ed? Appreciate it, Ed. Appreciate it, Darrell. Appreciate y'all staying there with me, bro. I had, life likes to pop up. Life happens sometimes, so I had to go handle some business. So I played a little documentary for y'all, but I appreciate y'all patience. Y'all really rock with me, and I appreciate it. Still nobody on X. Nobody on X, right? We're 96 people on X. Nobody. Can I get some feedback? Can I get who's watching on X? I'm still trying to figure that out. If you're on X, press 1, right? Blink if you need some help, something. If you need some help, just blink. Shit. I'm telling you, X and YouTube got about a bunch of bots on there, but X is really a whole lot of bots. Press 1 if you're on X. Nobody's chatting. Come to the chat. There's a chat. Press 1 in the chat. But anyway, to start the new month, right? Let's do this right quick. Let's go briefly do this. This is gonna let me know. Matter of fact, I'm not even gonna waste my time, right? If I don't get no feedback, I ain't gonna waste my time, right? I ain't gonna waste my time. I was about to give y'all something. But if you're looking at ES, well, I like to look at the equities, right? I like to look at ES. ES currently trading at 7,200. We just started the new month, right? So we got 25 trading days in the month. 25 trading days in the month. What's up, AWB? 25 trading days in the month. Still no feedback on X. 103 people on X, no feedback. New monthly candle, 25 trading days. We are in price discovery in the equities, right? Price discovery. So this is where I start my analysis at. There's really no point in going any higher. We're right here on the equities monthly time frame. We cleared this buy side liquidity right here. We just pretty much last month we just traded straight through it, closed very bullish, and now price discovery. We already so far took out last month's high. Here it is. The trading month hasn't even started, and we have taken out last month's high. That's ES. Let's go look at NASDAQ on the monthly. Same thing with NASDAQ. We have closed the month of April very bullish, clearing the buy side liquidity, which was the previous all-time high. And now we are in price discovery. So these markets are trending. The better opportunity came back in the end of March, early March, something like that. We traded down in March, traded down into this BISI, buy side imbalance, sell side inefficiency right here. And it took off, it rallied, right? And then same in the ES, right? Same in ES, we traded lower. Let me do this. So on ES, we traded lower, right? And we traded down into this BISI as well on ES, which stands for the S&P 500, right? This is the futures market. This is the futures market for the NASDAQ and ES right there. So you can see similar things. This is ES. And this is the NASDAQ, right? Can you tell the difference? NASDAQ, ES. ES, NASDAQ. What about the Dow, right? Let's go to the monthly on the Dow Jones. This is a 3 month. Let's go down to the monthly. Make sure y'all hit that like button, subscribe. Dow Jones back in March, retraced lower. When it retraced lower, right, you got to kind of zoom in a little bit. Zoom in real close. See this little BISI right here? It fell just short of it. It didn't trade down into it. But look, it doesn't have to just use the BISIs. Look at the consecutive down close candles. This is one large order block. So these consecutive down close candles, right? That's one order block. Use the opening price of the very top one right there. Precision, right? If we're talking about the Dow Jones, precision entry, bullish order block right there. Trades down, taps it, rallies higher, right? That's the Dow. So those are the three indexes, the three major indexes that I follow. Primarily trade the NASDAQ. So looking at the NASDAQ, right? Let's go down intraday. Let's go down to a 15-minute time frame. Right? 15-minute time frame. Let me take a quick peek at it. You can see that the market it pretty much gapped up. So this Sunday, we gapped up higher, right? And we already retraced down and the market is back on the way up so far. But look, closing price on Friday, opening price on Sunday. Y'all in the chat, what do we call that? When we close on Friday, we get the closing price, and where we open up on Sunday, what do we call that? Y'all let me know in the chat. It's a PD array. Which PD array do we call it? Close, open, just like that. Highlighted with my Fibonacci. You can see our price trades down into it. Yes, Ed, new week opening gap, right? New week opening gap. You for sure, it definitely does trade down inside of it, right? Feels it, or not completely feels it, but it trades down to the discount side of it, right? On the discount side of it, consolidate. It drops at 8 p.m. Takes out sell side. Takes out the sell side liquidity. See these lows in here? Sell side liquidity right there, right? They sweep those lows in the discount of the new week opening gap, and then boom, rallies higher, right? Trades back down, consolidates, rallies up. And this is a market that I will not trade because it's at a very premium, right? It needs to offer some type of retracement. And where am I waiting for that retracement at? I'm waiting for that retracement on a higher time frame, like a daily. All right, let's go back out to the daily. You can see I'm going to tell y'all now, I'm not trading tomorrow. We don't have no news on the calendar, so tomorrow I'm not even trading, not touching it. But just looking at the daily, let's say it does decide to retrace. Let me hide this. Let's say it does decide to retrace, right? It comes down. I'm interested in this little area right here. Y'all in the chat, what do we call this area right here? This section of price action, what do we call that right there? Who knows? Let me get some entertainment. Let me get some feedback. Y'all on X, y'all come engage the chat. Ain't no way I got 105 people in the chat on X or watching me on X and there's nobody in the chat. Where's everybody in the chat? Right? 105 people watching allegedly, but where's everybody in the chat? That's nothing but bots, right? It's nothing but bots. It's crazy. Yes, Dorelli, that's a volume imbalance, AWB, volume imbalance. But check it out. Y'all also want to include this right here. What is this right here? Right underneath the volume imbalance. What is that right there? What do we call that? What do we call that right there? Yep, AWB. It's a volume imbalance plus BISI. So AWB, already knowing, going into tomorrow, right? Going into Monday. This is a level. This is an area of interest. Now I'm looking at the perpetual, right? Now the current contract might be a little different. I'm looking at the perpetual, the continuous contract. And when you're looking at the continuous down here in the bottom right, which I'm covering it up right now, you can't see it, but on your chart, you will see something that says B-ADJ. B-ADJ. You're gonna toggle that, and when you toggle it, you will see the chart change. Well, not really. Yeah, not really, because I'm on a daily, but that's what I'm looking at right here, right? Disregard what I just said. Normally it toggles, but you want to use it kind of like how we use the button in the current contract. But this is a level of interest in case we come down for whatever reason. In the meantime, I'm just letting it go. I'm not engaging this. I don't want to trade this. Also, for tomorrow, Monday morning, sleep in. Fuck. Don't rush to the charts. If y'all in the Discord, again, if y'all on YouTube, y'all can join the Discord, right? The link is in the description. Here, buddy, Hamad. What's up, Hamad? Appreciate you, man. Who is this on X? No, I didn't delete it. What's up, Hamad, man? Matter of fact, y'all give me a follow, man. If y'all on X, definitely give me a follow. Dorelli, you wish I could sleep in? Well, that's what I mean. For the people that I get it, Dorelli, I get it. But tomorrow, kind of relax. If you're trading, right, just relax. If you're trading or trying to, like, a lot of people, they anticipate Monday mornings and they go in there in the morning and get fucked up because, you know, Mondays can be like that sometime. In the beginning, when you're learning, Mondays can rip your face off. It can disappoint you. So I say Monday morning, once you learn this skill set, you kind of get a feel for what the market is going to do. You're going to be able to see ahead of time, like, hey, come Monday morning, I'm going to relax. I ain't doing much because of current market structure. The market is at all-time highs. It's in price discovery. What I need to rush to the market for if it's not going to offer me a discount. Now, come Monday morning, 7 o'clock in the morning, if this candle right here, which the market doesn't open until 9:30 a.m. in the futures markets. The market doesn't open at 9:30 a.m. Eastern Standard Time on a Monday. I'm not going to rush to the market if this market is currently where it's at. Now, if I'm looking at the daily and it start to come down and is wanting to reach for this, and check this out, right? Check this out. I can see a potential. Check this out. I already can kind of envision it. Now, it doesn't have to happen. We got to wait until we go into Tuesday. But I already can see a potential this right here. Y'all let me know in the chat. What would this be right here? I could see that potentially forming once we get past Monday. Now, it's not set in stone nor guaranteed, but I can already envision it happening. What would we call this PD array right here? What would we call it? If y'all on X, make sure y'all give me a follow, right? Give me a follow. Yes, Dorelli suspension block, Ed suspension block, right? Chef suspension block, right? So yeah. We're not there yet. So this is why I say I'm taking off Monday. Yep, AWB, you're correct. Check this out. If I'm already able to forecast and see this ahead of time, right? Why do I need to rush to the market on Monday? This is a sentiment day. We just open up. It doesn't really open. The volume doesn't really come in until 9:30. After 9:30 on Monday. This is another reason why I don't trade on Sundays. I don't trade Sundays. I don't touch Sundays. But come Monday morning, this market can open up. Well, this market can range going into tomorrow and close just like this. Or it can close bearish wherever it decides to close. But wherever it closes, that's going to be my level of interest. We can see a suspension block and Tuesday, Wednesday, trade down into this, make it kind of efficient and then continue to go higher. That's what I'm looking for. But this is not valid yet. So we have to wait for Monday to close. Not valid yet. So in the meantime, since it's not valid, I will look at this this level of opportunity right here. This BISI plus volume imbalance, right? So we need to see how we play out Monday. But I'm not rushing to the market tomorrow. For what? I'm being selective and I'm being strategic with my setups. From the daily, let's go down to the 4 hour. On the 4 hour time frame, right? We're just consolidating right now. Nothing to be... I'm not impressed by nothing. On the 4 hour, you can highlight this right here. Highlight the bullish order block on the 4 hour right there. That's a bullish order block. Again, not rushing to this, right? It can trade down into it as it already has so far. Trade down into a rally, but it's consolidating. Trade back down into it. We're not going to see nothing until tomorrow morning, and there's no news tomorrow. But let's say it decides to break down, right? Let's say price starts to slip. Well, look at these lows in here. This is sell side liquidity right here. These lows on lower time frames, liquidity. And if it decides to trade down into that, BISI on the 4 hour, right? BISI. But I think it might be a consolidation day or it continues to go higher on Monday, right? It might just shoot out the gate on Monday or consolidate. And if it consolidates on Monday, then that daily suspension gap will form. It'll be valid then. So again, not rushing to the market. Not even excited about this, to be honest. Very dry. We just look at this price action. See this right there? Very parabolic. Straight one direction. Clear premium. It's in a clear premium. It just went vertical, right? Straight vertical. See that? So why would I want to be buying this right now? I mean, you could scalp it. Yeah, I can get in there and scalp it for a few points. But to me, it's at a premium. I would prefer to start shorting this, but we're not in those conditions yet to short, because they keep driving the markets higher on higher time frames. They keep pushing it up. So I'm not in position to want to short that right now. Just staying with the order flow, stay with the trend. Y'all on X, can I get some engagement on X? There's 111 people on X, 13 people on YouTube. What the hell? You know what I'm saying? Like, why is there a drastic difference? I don't know. YouTube is not showing showing my streams, and X has bots over here. So it's an interesting thing, right? It's an interesting thing. But this is what I'm looking at so far going into Monday for y'all in the Discord. Again, if y'all want to tap into the Discord, the link is pinned to the chat. It's pinned to the chat in YouTube. Let's see. But yeah, still bullish on NASDAQ. Same thing on ES. Same thing on ES. Go down to the daily on ES. You can see the vertical price action. Go down to a 15-minute. You can see the similar things with ES. Excuse me. With ES, we got a new week opening gap. Price close, price opens right there. New week opening gap. It's not random. Price consolidating right now near the equilibrium of the new week opening gap right now. It hasn't rallied up like the NASDAQ. So ES is just kind of quietly accumulating inside of this range right here. Right. Also, where's the liquidity? That's the next thing you want to ask. Like, you see all these highs up here, that's liquidity. There's also liquidity below us, but the market is bullish. So I'm anticipating it to continue to go higher, push it higher. They got this high right here. That's Sunday's high. If you're looking at ES. And then there's also the all-time high levels up here, right? That's where liquidity, that's where pending orders. For me, that would be targets if I was to go long, right? Those would be my targets. So that's ES. Let's look at gold. Let's go down to a 15-minute time frame on gold. I kind of just want to look at it intraday. Gold. Friday's close, Sunday's open. Every one of these futures markets, same little concept. Close on Friday, Sunday's open, little gap. Let's highlight this gap right here. Take Friday's close, Sunday's open. Here we go. Drag it out to the right. And you tell me if that's random, right? You see how we trade? We gap open higher for gold. We trade down. When we trade down, look over here to the left. This shit is not random. This shit is algorithmic. Shit repeats all day, every day. Once you see it, you can't unsee it right here. That's a BISI, buy side imbalance, sell side inefficiency. Trade right down into it. Price, first of all, they take profits. Price retraces back up. When it trades back up, it trades into the new week opening gap, right? When it trades into the new week opening gap, taps the set 0.75 level, right? Shows weakness and it's starting to sell off again. Also, if you look over to the left, you could use this SIBI from last week. That's Friday. That's actually an inversion fair value gap right here. Highlight that, draw it out to the right. Inversion fair value gap inside of the new week opening gap. And you can see how price is using it right now in gold. These concepts work in every market. I don't care what market you look at. They're working in every market. That's gold. Kind of bearish on gold. Let's see what it wants to do. But if it had to sell off right quick, I would love to see gold at 45.60, 45.60. Let's see if it wants to come down here eventually to attack the sell side, right? Is it bullish or is it bearish? Y'all let me know in the chat. Y'all bearish on gold or are you bullish? This is me just quickly analyzing it, right? Quick analysis. Where's the liquidity? There's sell side right there. Buy side right up here got taken out. See these highs over here? They rallied it last week on Friday. They sent it higher, took out the buy side liquidity right there, right? Smart money offloaded their long positions, sent it into a market maker sell model, right? After taking out liquidity, look at the retracement here. You can use this right here. You got two options, right? You got two options. You can use this right here, which is a SIBI, or you can use the inversion fair value gap. It's up to you. It's your preference. Once you see it, you can't unsee it. You just start pulling the tools out. So there goes the SIBI, right? And then you might see the SIBI, but I might see the inversion. And the inversion actually gives you multiple opportunities right there, right? Drag it out. So let me give it another color. So the inversion, darker orange, SIBI, lighter orange, trades into the inversion later on. Better entry on the SIBI, but if you missed it, it gives you another opportunity at the inversion right there. Boom, just like that. Not random. Not random. And now it's starting to show low resistance sell-off on Sunday, and I would love to see it come down and take out these lows right here if I was in this trade. 5 minutes. See how do you see how I'm easily able to frame up the market, right? Look over here, market maker buy model, rally, take out buy side. They offload their positions, put it in a smart money reversal. First low risk entry up here, right? First stage distribution, and now we're going lower for a second stage distribution, right? That's a complete model. That's a complete system that y'all might not be aware of. Y'all might want to learn it. Y'all tap into the Discord. The link is in the description if y'all want to learn the lingo, if y'all want to learn this shit. But right now it's in a sell program, right? And it's kind of high resistance, but still tradable, right? Still tradable. Let's go down to a 1 minute. 1 minute time frame. Even on the 1 minute time frame, what you just seen on the higher time frame, look on the 1 minute. Market maker buy model on the 1 minute time frame. It goes up. It trades into that inversion fair value gap on the higher time frames. When it does that, it takes out buy side liquidity. Here, the same model on a different time frame. You know, blow your mind, right? Same model, lower time frame. The market is fractal. It's a matrix. As above, so below. The things that are happening on higher time frames are happening on lower time frames. They go up, take out the buy side, offload their long positions on a high frequency level, displacement lower. When the displacement is lower, look at this right here. Same shit I just showed you on the higher time frame. Inversion fair value gap right there. Let's give it another color because I'm on a lower time frame. Let's give it a blue color. Inversion fair value gap, trade through it, right back to it, midpoint. That's your entry, displacement. What if you missed it? Well, you got this SIBI right here, right? You got a SIBI right here. Sell side imbalance, buy side inefficiency. That's another entry position. You can get in it right there. Or look, you see these two up close candles? What is that? Y'all tell me in the chat. What are these two up close candles? What do we call that? Make sure y'all hit that like button, subscribe. This is what they, I kind of got to say this to the end because I'm giving you mentorship level analysis, right? This is how I train you, right? This is how I'm going to train you. So if y'all want to tap in, y'all join the Discord. Yes, Shep, bearish order block. Two consecutive up close candles, bearish order block. You can see if you missed the SIBI, if you missed the SIBI, right? You didn't get in the SIBI, you can get in as the price is coming down to the order block. Boom, just like that. You can enter on the order block. You can get a deeper entry on the SIBI, right? Sells off. Small little SIBI in here. Zoom in a little bit. Small little SIBI because price does wick into it. If you think it's random, I don't know what to tell you. Let's zoom in right quick. Zoom in. Let's look real closely. You see this right here? SIBI, right? Let's highlight it. You got the SIBI. Boom, just like that. Look at the precision, right? Look at the precision plus volume imbalance. SIBI plus volume imbalance. You can see our price wicks into that. Boom, just like that. You can't make that shit up for nothing to save your life. Let's zoom in a little closer. Let's zoom in a little closer. Right? SIBI plus volume imbalance. Now watch this when I highlight the volume imbalance. I'm going to take a Fibonacci, right, at the volume imbalance and lay it over the volume imbalance just like that. Look at that precision. See how it trades into it? Bing, just like that. And then sells off. What about if I lay a fib, right? What if I lay a fib from this SIBI high down to the SIBI low, just like that? And then I can add more levels. Let's add my 16ths, just like that. Now, let's zoom in a little closely. Zoom in a little closer, just like that. You can see it doesn't really quite trade into it. That just lets you know it's very bearish, right? Very bearish. But still, you can use this as well. See these levels? These are all entry levels, right? It can get real sick out here, right? It can get real wicked with the precision. That's why y'all need to tap in with me. Also, let's say you missed that, right? Let's say you missed that SIBI plus volume imbalance. Well, guess what? You can use the suspension gap. The suspension gap, watch this. You got a volume imbalance right here. You got a volume imbalance right there. You can use the suspension gap. So what I'm going to do is I'm going to drag this down just like that. Two volume imbalances, one candle. Volume imbalance on the up above it, volume imbalance below it. Check it out. You missed this wick up, but this entry right here trades into it, gives you another entry. Can't make this shit up, right? I can do this all day, right? Y'all just got to tap in. You know, you just got to tap in. If I lay a Fibonacci over that suspension gap, look at the precision, right? Let's zoom in a little bit better. Look at this candle right here. Let's say you miss everything. This candle right here opens up, trades into the suspension gap. Look at the levels that it hit. For you people that don't think this shit is real, right? Look at the levels that it hits for you to enter. It hits every one of these levels. Look at the precision right here on the 0.31 level. You see that? Precision. Bing, just like that. Can't make this shit up, right? And then eventually what does it do? Sells off, right? So just when you think you can't get in the market, there's always ways to get in the market. And then guess what? It just took out sell side liquidity just like that. Sweep it. That's a target, right? So let's just hypothetically say you was trading gold futures. Excuse me. Let's just hypothetically say you was trading gold futures. Let me put that red trend line right there. Gold futures. Let me pull up the CME. Right, you go to the CME website, go to markets. You want to go to metals, and you want to go look at gold, right? Gold futures, right here, GCM6, gold futures. Once you pull up that contract, you want to go to specs. When you go to specs, you want to go to minimum price fluctuation, 10 cent per troy ounce, right? So every 10 cent move, right? Every 10 cent move in gold, and that's all it goes by in the futures market. Every 10 cents, that's $10. Every 10 cent price move in gold, that's $10 per 10 cents per point, pretty much. $10 per point. So if we come back over to gold, let me pull up gold, come back over to gold, and let's just hypothetically say this is the futures contract for gold. And let's just hypothetically say you enter from here down to here, right? From there to there, that's 862 points. Now, granted, this ain't the futures contract. This is the spot price. This is the spot price. But just to save time, right? Just to save time, let's just say this is the futures contract, which makes me have to pull that up at this point. But let's just say it went 800 points. Let's round off, right? Let's say it goes 800 points, because remember, every 10 cents, that's $10. What is the math on that, right? Y'all pull out y'all calculators. What would the math be? Check this out. See how it takes out liquidity and it retraces. Real-time price action, by the way. It takes out liquidity, retraces, trades into the SIBI, sell side imbalance, buy side inefficiency, right here, right? Not random, trades into it. Now let's see it displace lower, right? Let's see it want to displace lower. And you zoom out, go out to the 1 hour time frame. I already highlighted the level that I wanted to see. You got sell side liquidity below us, right? Sell side right down here, about 45.60. So gold on the move tonight, right? Gold on the move tonight. Intraday, right? Intraday. What else? Not going to cover silver. Let me briefly look at natural gas. I'm not going to keep y'all too much longer. I kind of got tied up right quick. But hopefully you learned something as far as the debt market, right? Hopefully you learned something. Please follow me on YouTube. Follow me on X. Also, if y'all want to get in the Discord, the link is pinned to the chat, right? The link is pinned to the chat. Copper pushing higher. Copper about to breach $6 per ounce. So y'all be on the lookout for copper. Just briefly looking at some of these markets. Apple currently trading at look, Apple about to break all-time high, $280 a share. Nvidia, $198 per share. Microsoft, $414. Amazon trading at $268. We got Meta trading at $608. We got Tesla trading at $390. We got Alphabet, Google, $385. Palantir, $144, right? $144 per share at a discount. What else we got? Went over the equities. We got Coinbase trading at $191. We got Netflix, $92 per share. Circle, $99 per share. Broadcom breaking all-time highs, $421. Berkshire Hathaway, speaking of Warren Buffett, it looks like it wants to pull down. Maybe it's trying to drop off of his sentiment, but it's retracing very heavily right now. Oracle, $171 per share, right? Oracle. What else we got? I'm not going to look at that. Crypto, right? Crypto. Let's briefly go through this. Crypto. XRP currently trading at 100. I wish, right? See? But anyway, XRP trading at $1.40, right? Per XRP token. Bitcoin trading at 79,000 on the move higher. What is it? Is it going to reject? I'm going to look at Bitcoin here shortly. XLM trading at 15 cents. Ethereum trading at 2,300. XDC trading at 2 pennies. Quant trading at $69. Hedera trading at 8 pennies. Constellation. Dust, right? Dust. What else we got in crypto? IOTA, 5 pennies. Algorand, 11 cents. Solana, $85 per token. Flare Dust, ICP, 238. Cardano trading at 25 cents. Not even gonna mention Solo. Chainlink trading at $9.20. So are y'all still accumulating crypto? Because there are still discounted assets out there that y'all can accumulate, right? Still some discounted assets for y'all to accumulate. But let's briefly look at Bitcoin right quick, and then I'm gonna kind of wrap this up, right? I'm gonna wrap this up. It's already late. Bitcoin right now, we got this is a monthly time frame, right? Monthly time frame is trading down into this inversion fair value gap right here. This is a level of interest for me currently on the monthly. If you zoom out to a higher time frame, Bitcoin looking very bullish, to be honest. We had a pivotal time. When it retraces into this inversion fair value gap right here on the monthly, are we going to reject it to come lower, or are we going to invert it to go higher? That's the dilemma right now for crypto. And crypto is kind of on the rise, but as it retraces into this inversion, right? And I'm neutral. I'm honestly neutral. It can come higher or lower, but as it trades into this inversion, it's already trading into this SIBI, right? The SIBI is inside of the inversion. So let me show you. SIBI right here. Sell side imbalance, buy side inefficiency. I'm going to give it a, let's say, darker blue, right? SIBI. Trading inside of it right now, right? And then the lighter blue is the inversion fair value gap, which was a BISI. We inverted it by trading through it. Now we're trading back into it. Right now, we're trading, it's neutral. I'm 50-50 on Bitcoin, right? 50-50. It's either going to start pumping higher, right? Deep ass retracement, send it higher, right? When it deeply retrace on the monthly, look at this candle right here. That's a BISI. That's an order block. Right here, bullish order block right there. Trades right down into it on the monthly time frame. Now, does that monthly order block send Bitcoin to the heavens? Right? Does it send Bitcoin to the heavens? And if you zoom out some more, come out to the 12-month time frame. On a 12-month time frame, we traded down into a 12-month fair value gap, 12-month BISI, right? So it's going to be interesting. And I asked my community, does this 12-month fair value gap, or does this 12-month candle, right? The current 12-month candle, we have 7 months to go to finish the year, right? 7 months left in the year to complete the yearly cycle or the yearly candle. And does this candle at some point turn green? Y'all let me know in the chat. Do we close this candle green, or does it close bearish or indecisive? Indecisive meaning it doesn't really do nothing. Dorelli, we going to the moon. Y'all reading price action, y'all can see it, right? Y'all starting to see it. Man, 118 people on X, press 1 if you're not a bot, right? If you're not a bot, press 1. Somebody posted and left, so I don't understand that right there. Somebody posted it and delete. So 118 people on X, press 1 if you're not a bot. Other than that, you're a bot to me. But anyway, that's Bitcoin right there, right? That's Bitcoin. You can see how it trades down into it, supports it, and now we're pushing higher. It's one of them things, man. It's one of them things. I would actually love to see them bring it down. Check it out. This is what I want to see, because I'm kind of like, I want to go against the grain for whatever reason. But I want to see them come back down into this order block and drive it deeper to the discount side and tap this order block right here. I would love to see that. It already tapped it. Check this candle right here. Open, blasted through it, right? It activated that order block. Can we get that? Can we get another retracement down to this? To about 45,000? If not, that's cool. That's cool. They're going to do what they want to do. They're going to do what they want to do. That's Bitcoin, right? Let's come look at XRP again. Very quiet on XRP. I think right now there's of course there is, but there's way more volume in Bitcoin than there is in XRP right now. And then they got the whole XRP Las Vegas thing going on. Let's come over to X. XRP Las Vegas, right? The XRP Las Vegas Bitcoin conference is underway, but the real action is happening outside XRP. Watching Ripple take over Las Vegas makes one thing clear. That was April 27th. Let's go look at the latest. So I guess people are arriving at this XRP conference. James Rule XRP, another winner. The same usual people that's been around for years, right? They showing up. Congratulations, you look very healthy at XRP Las Vegas. Joel Katz, XRP Las Vegas, XRP holders, this is your moment, right? And there go y'all favorite person right there. Shout out to him. What's up, Cheryl? XRP lighting up Las Vegas. You know, people living, man. People is really in the cult, right? People in the cult. So Larry Fink appears to XRP. Bullshit. About to say bullshit. Larry Fink didn't come to XRP Las Vegas. He definitely didn't. But this crypto space is wild to me, man. It's really wild. It's I don't know what's real. It's like filled with artificial intelligence and bot people, but you know, we're gonna get through it. Bitcoin 2026 Las Vegas, and then comparing it to XRP Las Vegas 2026. So that's what's currently going on right now, right? That's what's going on. XRP Las Vegas. Y'all be on the lookout for that. Look, XRP is the standard, right? Yes, the standard, but we need some institutional sponsorship. And speaking of that institutional sponsorship, let's come back over here to XRP, the chart. Let's go out to the 12-month time frame, and we're gonna wrap this up. We retrace down into this BISI, buy side imbalance, sell side inefficiency right there, right? Same thing like we just seen in Bitcoin. We trade down into it. I would love to see them come tap this order block as well, but it's looking very bullish to me, bro. Y'all might not see it right now, but it's this longer time frame is looking bullish unless something catastrophic happen. Go down to the monthly. You can see how we tapped that BISI and now it's starting to want to push higher. It's probably going to break out, right? This kind of anticipated. It might want to break out, and if it does, look for this level right here to trade to. This is a SIBI, and it could get crazy. Like we can blow through all of that like we did back in 2024. Just blow through all of that and break new levels, right? We can go to new levels, right? Y'all come over on YouTube and subscribe, right? Subscribe. YouTube is definitely suppressing for whatever reason. I can't get followers for whatever reason now. So if y'all watching me on YouTube, make sure y'all follow, subscribe, right? And same thing on X. I got 118 bots in the chat. Nobody want to chat. Do people use the chat on X? I don't know. But trying to get this information out, this knowledge, this educational shit, you know what I'm saying? They definitely YouTube is definitely suppressing this educational material. This is highly valuable, right? This stuff is highly valuable. But right now, quiet, right? Quiet Sunday going in. We're starting May, second half of the second month of the second quarter of the year. So, you know, we're probably gonna start picking up steam going into the summer months. A lot of things to watch out for. Right now, the thing that I'm looking at is the debt crisis, because you know, it's gonna keep kicking. We're gonna keep kicking the can down the road, but the debt markets is what I'm following, and I'm tying that into everything else, right? Because it all starts with the debt market. So I look at every market, but the debt market is the main one that I look at. Shep, you say everybody just lurking. Well, shit, if you gonna lurk, man, troll too. I'd rather you troll too. If y'all in X and you lurking, troll me or something, so I know you are real. At least I know trolls are real, right? But people definitely lurking. Lurking but can't get a follow. That's crazy. It is what it is. But that's XRP, went over Bitcoin. I pretty much covered most of the major markets. What I like to do is I like to do intermarket analysis. That's when I'm looking at multiple markets and comparing the relationships to other markets because the entire system is connected. Not one market runs everything, which is amazing to me. Not one market runs everything. Lots of creeps. Yep, AWB, lots of creeps. And here I am. See, I can easily do this. Now, when I do this right here, right? Let me show y'all. When I do this, right? When I do this right here, the views go down. When I do that right there, when I remove myself off camera, the views go down. But when I'm on camera, the views, people just lurking, right? People just lurking. But anyway. Yeah, man. Again, I live in these charts, by the way, y'all. I live in these charts, but to do it, sit up here for hours on YouTube and explain, try to convince motherfuckers that, hey, look at this shit that I'm showing you, study it, right? I'm giving it to you on a silver platter. To sit up here for hours and do that, right? It can get I don't know the feedback because of whatever's going on online. As far, I don't know if I'm suppressed. I don't know if there's bots watching. I don't know. I don't care. Once I turn this live stream off, I can live in these charts and see shit that y'all wouldn't even believe. Right? I'm seeing things. I'm doing shit that I gotta express it to other people because keeping this information to myself in my own little bubble, right? This shit is it could be, I just can't keep it to myself. So if you watching me, this is an educational channel, right? I do educational content to learn this skill set because once you see it, you can't unsee it. Markets repeating all day. Let's go check on gold, right? I was just analyzing gold. Let's go look at gold. Okay, gold rejected. Let's go back down to the 1 minute. So let me just show you how this shit ain't random, right? Do you think it's random how gold trades down, takes out this liquidity right here, and then rally just rally higher, just like that? It goes back up because it hit a key level and took out liquidity right there. They offload their shorts and they send it in the opposite direction. And you could be probably a buyer if I drop down to a 15-second. Yep, another tool in your belt learning this. Yep. If you drop down to a 15-second, right? High frequency time frame, low, high, lower, low, displacement up, shifting market structure. Nothing really clean in here. Nothing really clean until you probably get a right here, BISI. BISI entry right here. Buy side imbalance, sell side inefficiency right there. That's another little high frequency entry on a 15-second. You get in. What time does it happen? Oh, it's not during the macro, but it enters, trades up. You can get out right here. You can get out. Let me remove this. This was a SIBI, and you can get out right there. From here to here, you can get out. That's a quick scalp, right? In, out. No point in holding it any longer. That's all you need to replace your fucking income. That's all you need to replace your income. In, out, just like that. 430 points. So you put that in perspective. Right? Put it in perspective. But I definitely appreciate y'all joining, man. I appreciate y'all joining. I can go all night. It's already getting late. Kind of got sidetracked, but I definitely will be back probably tomorrow. I might do something tomorrow. More technical, not so much news based, but I had to get into the debt. That's where my mind is currently. The 40 trillion debt marker, really higher. And then, watching these markets run up, breaking all time highs. The inflation is crazy. The economy is crazy. People going through it. I didn't even get into that neither. I had TikTok ready to go so that we can get into the whole, what the people think right now. But I'll say that for another day, right? I'll say that for another day. But I definitely appreciate y'all joining. Y'all in the Discord. I'm gonna tap in with y'all where we are more, technical. We giving more details in the Discord, right? Way more precision, way more details than I'm giving on YouTube. I kind of got to make this entertaining on YouTube because this shit can get dry. If it's just all technical analysis, it can get real boring for a lot of y'all that want to be entertained. And this ain't for everybody, right? It can get real surgical. But anyway, I appreciate y'all joining. I'm gonna let y'all wrap it up. Hopefully, I'm gonna wrap it up. I'm gonna let y'all enjoy your day. Hopefully, y'all was entertained. Hopefully, you learned something. Again, watching the debt market, watching the crisis over there in the Middle East, the blockade, not so much the war, because if they was going to continue the war over there, they would have did it. But I'm watching that, watching the debt, listening into crypto, keeping up with the clarity stuff, right? And just for the most part, my mindset every day is taking opportunity in the futures markets. That's where my mindset is daily, because there's constant opportunity every day. Constant opportunity every day, every week. It doesn't stop. Doesn't really matter what market you trade. But y'all tap in with me on X. Again, y'all come over on X. Y'all follow me on X. Let me come to my page. Y'all tap in with me on X right here. This is my X. So if you haven't tapped in with me yet, y'all tap in with me. Subscribe, follow, right? Repost the live stream. Y'all also come over here on YouTube. Follow me on YouTube, right? This is my YouTube channel that y'all currently on. If you're on X, this is my YouTube channel, right? Y'all come over and follow me. Subscribe. This is where I do majority of my work at. What else? If y'all want to tap in with me on Patreon, right? Patreon, where I have lessons, I have mentorship. Y'all come over here into Patreon. The Patreon link is in my YouTube bio, right? YouTube bio. Tap in with me on Patreon, where you can get my private lessons and my mentorship, right? Where I kind of go through, walk through with you one-on-one. And then also the Discord link is free in the chat. Free Discord link in the chat if y'all want to sign up. But in the meantime, or until the next time, I appreciate y'all watching. I'll get back with y'all on the next one. Peace out.